It's not just the earnings calls of the Mag 7 this period that matter. It's the earnings calls of the other companies.
The expectation for 2025 and 2026 is that earnings growth rates are going to decelerate.
We're seeing a separation of the winners and losers. We're probably going to be choppy here for the next 3 to 6 months.
This is a good time to think about these other diversifying hedges.
I don't think what we saw on Monday with DeepSeek is that canary in the coal mine. I really don't think so.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, going into that weekend, equity futures advancing once again. On the S&P, up by 0.4. On the Nasdaq 100, up by 0.7. We've got one question this Friday morning. Is this market set to collide with President Donald Trump's self-imposed deadline?
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. The people that have poured into our country, the drugs, fentanyl, and everything else, the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
So will he or won't he slap 25% tariffs on Canada and Mexico? The Wall Street Journal reporting that President Trump's advisors are considering several off-ramps to avoid enacting the universal tariffs on Mexico and Canada that he pledged.
But he's certainly brandishing them, and the scope is there for him to do this tomorrow. It's a self-imposed deadline, even though the memorandum that he signed when he first came into office was to look at the trading partners by April 1st. He then threw out February 1st for Canada and Mexico. The North Star for this has to be fentanyl. Kevin Hassett was on Fox Business and talked about the fact that he's very serious about using whatever he can, economic might, to fight fentanyl. Jonathan, what strikes me about what he said yesterday, though, is I don't think the market is prepared if he goes as far as oil. And Trump said he can make that decision as of last night when it comes to Canadian imports of crude.
Let's stay on fentanyl. So Neil Dutta of Renmark wrote this piece just yesterday afternoon, and he said this: if there is a silver lining here, it's that Trump is mostly talking about fentanyl. Goes on to say that means there could be an off-ramp over the weekend. It wouldn't be the first time.
It could be an off-ramp. Also, Trump could come out, say that he has these tariffs in place, that they've been written up, hasn't yet signed them, to try to get maybe Canada and Mexico to the table, maybe some phone calls, maybe a trip like we saw Justin Trudeau take to Mar-a-Lago. But what I would also say is I was in D.C. for a few days. When I asked one of Trump's advisors, what does he most focus on around the world? I was keenly focused on, is it going to be China, Russia, the Middle East? And they said, are you kidding me? It's immigration and it's the border, and look at everything he's doing to make that point very clear.
Big one to watch going into the weekend. This is one to watch this morning. Apple in the pre-market, slightly firmer, coming out with numbers yesterday. The revenue for China, awful, down 11%. For the iPhone, not much better. No growth in the core hardware business. The outlook? Apparently the outlook was enough to cheer investors with the stock higher here, Annmarie, by a little more than 3%.
Enough to cheer them, but there's a ton of concerns when it comes to Apple, and you heard all of them on the call. Apple Intelligence in China. They're saying people are excited about Apple Intelligence, but if you're in China and you're buying that hardware, you don't have access to that Apple Intelligence. They're still trying to figure out how to get a local supplier, local services to help them with that. So Huawei is really leading the way. Then in the EU, they talked about this. Apple AI, the intelligence, won't be offered to customers until April, and continued scrutiny they're facing in the European Union. And then, of course, domestically, what we're talking about this morning, tariffs. They have to plan for potential higher tariffs.
Tim Cook was asked about it on the call. Do you know what he said? We're monitoring the situation. I think we're all monitoring the situation. That stock is higher in the pre-market by a few percentage points. The broader equity market doing okay on the S&P, up by 0.4%. Coming up this hour, we'll catch up with Sebastian Page of T. Rowe Price on why he's a reluctant bull, Adam Posen of the Peterson Institute on Trump's tariff threats, and Pierre Ferragut of New Street on Apple's positive outlook. We begin this hour with stocks rising after results from Apple and Intel. Sebastian Page of T. Rowe Price saying he's a reluctant bull. We remain slightly overweight stocks versus bonds, and our position for the stock market to broaden. However, we're starting to take profit. Sebastian joins us now for more. Seb, it's good to see you.
Great to see you.
Where are you taking profits, sir?
We're selling some stocks. We're going to remain still overweight for now. We're putting the proceeds in cash, so we're underweight bonds. and we're also selling some high yield. We're splitting the proceeds between cash and bank loans, which I think are attractive when rates surprise on the upside a little bit. They're kind of negative duration, if you will.
So 2 points to make here. One, why you're selling, and the second, why you're allocating the proceeds the way you're allocating them. Let's start with the why you're selling. Why are you selling? Why are you coming out of stocks just a little bit and selling down high yield just a little bit?
Okay, I'm going to give you the most consensus narrative, the most boring narrative.
Go ahead.
Okay,
It's Friday.
Yeah, we're confident in the economy. The economy looks just fine, but we're worried about valuation. And I watch surveillance every day, and everyone's on that boat. But valuations are expensive. And, you know, at 22 forward earnings, price earnings ratio on the S&P, it's high. In 2021, remember all the speculation we had? Does it start to you to feel a little bit like 2021? You know, in 21, someone bought a JPEG of a rock. Remember? 1.3 million. And when I say that to clients, they always reply that someone just bought a banana taped to a wall for 6 million. So they're starting to feel expensive.
What are you pointing to that's frothy, though? That's what I want to get into. Where do you see the froth right now?
Overall stock valuations? Overall. And I say overall because there's some stocks that are quite fairly priced in the world. So we're positioned for the market to broaden. But also credit spreads. Credit spreads really tight by historical standards.
What's fairly priced right now?
I think, look, if you look at the average stock in the world, you get a price earnings ratio of 14. That's actually the long run average for the average stock in the world. So that means that you have smaller caps, value, international small caps, EM, pretty much everything, but the technology sector, and there are parts of the technology sector that are also fairly valued. But it's all about the broadening. I think we're approaching peak concentration.
People have been saying this for months.
Yes.
Actually, they've been saying it for an entire year. John started off the conversation saying you're a reluctant bull. So is that what makes you reluctant? Just the valuations? Or are there other things you're concerned about, like policy uncertainty?
So I guess Lisa's not here today, so I need to play the bear narrative.
You've got to give us the doom and gloom, yeah.
Okay, look, I think long end rates are a real risk for those valuations. The curve is flat, you have tariffs, you have inflation, you have resetting higher on growth expectations. The direction of long end rates could be higher, and that could put pressure on those valuations. And then you have the usual list, tariff. Geopolitics, often they don't matter until they really do. And Annmarie, my view is that geopolitics will really matter when you see an oil shock. And given the pressure that this new administration is going to put on Iran and where Iran is right now, I don't know where it's going to come from. I'm not a geopolitical analyst,
Sure.
But that's one of the risks that's out there.
Well, you've got to allocate capital, and that was the second point you made. As you sell down some of those equity positions into high yield, you're going into cash and not into the long end of the bond market, not into treasuries, not into a 10-year at 4.53. Do bonds not do what bonds used to do in the portfolio from your perspective?
Look, we still hold bonds. We have an overweight. We're short duration. Bonds will do what they need to do only if we get a growth shock. And by the way, I didn't name it as a risk. It's still a risk that some growth-related data disappoints. Remember back in August last year, we had one bad non-farm payroll print, and the market kind of freaked out a little bit?
So did the Fed.
It doesn't take much for a growth scare. I don't think that's the base case. In that case, bonds will diversify your portfolio. Rate shock, inflation shock, bonds will not diversify.
You saw how the Fed responded to that unemployment head fake from the summer. They wanted to insulate the labour market. They cut interest rates 100 basis points. That was the starting gun for them. Things have changed a few months later. And I wonder from your perspective whether the threat of tariffs constrains the dovish bias of the Federal Reserve. Do you think it does?
Yes. I think it does because, at least in the short run, it's inflationary. We're talking about 25% on Canada. You get a ton of crude imports from Canada. I don't know how oil prices aren't reacting a bit more this morning, right? This is like 20% of oil consumption in the U.S. is derived from Canadian crude. So, yeah, I mean, that ends up being inflationary.
And when it comes to states landlocked in the Midwest, it's their only area where they actually get crude is from Canada. When you just mentioned earlier, we're never ready for a geopolitical shock, and it kind of shocks everyone when we get it. And you think that could be in the oil space. Could that be this weekend? Could it be Canada? Not something like Iran or Venezuela or Russia?
Well, the market doesn't seem to freak out about it yet, right? And a part of this is we don't really know what's going to happen to tariff ever. I mean, it could change on a dime. But I think once they're on, then it's harder to take them off. So I don't know. Annmarie, I think it's a small probability of a fairly sizable oil spike. When I asked a geopolitical expert recently, and I said, what could be the black swan in geopolitics in the oil market? And he said, well, once you start hearing that word in the news media, once you start hearing it on surveillance, Hormuz, which we haven't had any disruption there, but that is a large proportion of global oil flows. I'm kind of just, you don't know, it's a black swan.
Right. At the moment, Trump has been actually quite quiet about Iran and focused on other issues. You did mention something, though. Once you put tariffs on, they don't come off. And we saw that in the Biden administration. They kept Trump's first administration tariffs on, yet it added a little bit to inflation, but not enough. When we had an inflation spike under Biden, they didn't even remove them. So why is the Fed putting all this emphasis, potentially, in their concerns about policy going forward, what that does to inflation, on tariffs, if we've had them for years now?
Well, I think we're putting that emphasis. I don't think the Fed is coming out and saying we're watching the tariff game and we're adjusting our policy accordingly. We're reading.
Well, they did, though.
The
they didn't assume, and then they did assume.
Right.
Part of that is because of trade realignment, right?
Yes. I mean, look, they have to react. They're data dependent. And I think right now the Fed is wait and see. So you're right. The first round of tariffs weren't inflationary. I think there are all sorts of effects of tariffs that we don't understand. You see what happened with Colombia. Right? It's a negotiation.
It's not straightforward. I'm with you. I hear that all the time. But to Anne-Marie's point, the accusation leveled at the Fed right now is they seem to be more concerned with Trump tariffs than they were with Biden fiscal stimulus. And it's hard to get your head around that. Do you speak about that on the committee at all? What explains that?
I mean, we speak about all of it. And we debate all of it. Look, the Fed is looking at, or talking about looking at employment and inflation, and tariffs are a driver of inflation in the short run, could be a driver of inflation in the short run. I think it all boils down to this data dependency of the Fed. And if to the extent that tariffs drive the data itself, then the Fed will adjust, right? So there's several layers of reactions in macroeconomics that the Fed will react to. But you know, it's a treacherous environment, I think, for them it might not take much for the talk of rate hikes to start again.
Sebastian, we'll leave it there. That's the big question for 2025. In just a moment, we'll catch up with Adam Posen of the Peterson Institute, who made that point, not in the last few months, but way back in the summer. Sebastian Page at T. Rowe Price there. Seb, thank you, sir. Appreciate it. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Good morning, John. U.S. investigators have found the black box flight recorders from the American Airlines jet that crashed in Washington after a midair collision with a U.S. Army Black Hawk helicopter. The NTSB is leading the investigation and expects to produce a preliminary report within 30 days. A final report could take up to 24 months. Meanwhile, take a look at Apple shares. They're rising 3.4% in the pre-market after the iPhone maker gave a reassuring revenue forecast for the current quarter. But the results for the crucial holiday period were mixed. Total revenue in the fiscal first quarter rose 4%, but sales in China remain a sore spot, falling 11% in the quarter. And the Chinese AI startup DeepSeek is under investigation for allegedly using Nvidia chips that aren't allowed to be shipped to China. Sources say U.S. officials are looking at whether the advanced chips were acquired through third parties in Singapore. This comes after the Biden administration cut off China's access to Nvidia's most powerful chips. That's your Bloomberg Brief. John?
Yahara, thank you. Remember the story at the start of the week? $5 million, export compliant. By the end of the week, a few days later, I don't know about that.
And I think when we heard that, everyone around this table was throwing criticism of that and questioning it. Not only that, but congressional offices, Jonathan, now are being warned not to use DeepSeek. Lots of concerns.
Some big concerns. Friday morning price action, very, very different to Monday morning price action. We are positive here by 0.4% on the S&P. Up next, the tariff showdown begins.
I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. Those tariffs may or may not rise with time.
A conversation up next, live from New York City this morning. Good morning. 4 sessions down and we're poised for a week of losses on the S&P 500. We're down by about 0.5%. One more session to go. Equity futures positive here by 0.4%. In the bond market, yields higher by a single basis point. Under surveillance this morning, going into the weekend, the tariff showdown begins.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. The people that have poured into our country, the drugs, fentanyl, and everything else, the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
So here's the latest. President Trump set to hit Canada and Mexico with 25% tariffs on imports go into effect tomorrow. Both countries vowing to respond with tariffs against the United States. Joining us now to discuss is Adam Poston, the president of the Peterson Institute for International Economics. Adam, good morning. It's good to see you.
Good to see you, John.
There is a constructive view out there, and it sounds like this. This is what I hear a lot from equity bulls. They say the approach to tariffs is transactional in nature. There's scope for significant negotiation, and the backdrop right now for the broader economy is pretty decent. Things are going to be OK. Is there a price we have to pay for the uncertainty in the meantime?
Yes. The price we're going to see not just in equity markets, but we're going to see in specific industries. We're going to see in energy prices going up. We're going to see in disruption to the U.S. auto sector. We're going to see in sharp retaliation from Mexico and Canada on specific industries. I don't mean to be vague by saying specific industries, but the point is it's about choke points. It's about things that are hard to replace. And the big thing, as studies we've done at Peterson Institute say, and which is intuitive, is there's some range over which you put on a tariff and everybody's like, okay, it's a price rise, it's annoying, we'll deal with it. Mm-hmm. There's another range where it's like you're imposing shortages like you did during COVID, that suddenly it becomes unaffordable or inaccessible to get certain things you need. And that's when you start getting big macro effects. So I agree, John, with the people who say the underlying strength of the U.S. economy is there. But this is, frankly, nuts. Canada and Mexico are our two largest trading partners. We're at peace with them. They're military allies. They're democracies. And our auto sector and our food sector are incredibly integrated. So this is going to hurt.
But Trump hates trade deficits, so he will do anything he can to try to bring that deficit down or maybe bring up negotiations for USMCA. What do you think is the underlying drive for these types of tariffs that, based on my conversations, I'd be more shocked if we don't see them happen tomorrow? Is it a negotiation tool, or he wants to keep them on?
Annmarie, I think you're reporting your sense is right. We've been talking for months about expecting that the tariffs would really happen. I think it's much more likely the negotiations in the end go well with Canada than with Mexico. But the thing is, 25%, even if you exempt certain things, is an enormous number. This is, when people say, oh, the tariffs under Trump 1 were not inflationary, those were a couple percent in a few industries. This is very wide tariffs at a very high level with major retaliation.
So let's talk about the scope. Do you think oil is really on the table? Trump kind of flirted with it yesterday in the Oval Office.
We don't know. It doesn't make any sense to put oil on the table because then you're saying, okay, I want to buy more from Saudi or Russia. I just want to go back to your last point, which is right, which is how much is it negotiating versus keeping it on? The fear is, and I think what the market should fear, is that they're going to put on this across-the-board minimum of tariffs as part of the tax package. And then we're in an entirely different world.
Because it's a revenue raiser.
It's a revenue raiser. On net, it's probably bad for growth. And on net, it's not going to raise enough revenue. But that would be the justification.
Can you go through what you would expect in your base case as retaliatory? Because Trump is talking about potentially tariffs on Canadian crude. But for Canada, that would be the nuclear option for an export tariff.
Right. I mean, it's like when they complain, that, oh, my God, China's going to cut us off from something. So imagine if Canada cut us off from oil. Think about, in the 1973 oil crisis when the Arab petrostates decided to cut the U.S. off oil. How is that good for the U.S.? I mean, it's destructive.
So, Adam, the Federal Reserve has got to prepare for all eventualities. You warned back in August they should prepare for that, and we talked about this repeatedly. 6 months later, whatever it is, are you more comfortable with where the Fed is now compared to where they were going into the end of the year?
I'm more comfortable, but I'm not yet comfortable. I mean, the Fed has the luxury because, the fundamentals of the U.S. economy are quite good. And we've been getting good news on productivity, as we've also talked about. So the Fed has something of the luxury that it's not a crisis. They don't have to make up their minds now. But they keep having this inertia of saying, well, we're maybe not going to cut as much, but we're still going to cut. Now, on the fundamentals of the U.S. economy, the idea that they need to keep cutting was already, I think, arguably a mistake. So then comes this issue of tariffs. Do they play Hamlet and agonize, oh, is it a first-round one-off effect, and we got to wait to see whether it goes beyond oil or beyond autos? Or do they say, hey, in a world we're close to full employment, there's pricing power, we're creating shortages.
Do you think there is pricing power? You don't think that corporations will have to just stomach this and hit margins?
I don't think so. I mean, the evidence is not the so-called greedflation, that was always a myth, but the evidence is not every industry, but most industries, the companies do have pricing power. I mean, when the economy's growing well over 2%, people are buying. When we had an inventory correction, otherwise, as Jason Furman's pointed out, the underlying strength of the U.S. economy is even stronger than the 2.3 number we had. The idea that there's no pricing power is just strange.
I think this conversation is important because it's difficult to sit here and say, I think the president will do X or Y this weekend. We've got to think about how inflation-prone this economy might be. When you think about sources of inflation at the moment, whether it be energy, labour, goods or services, what is it about the current state of things that you think this economy is more inflation-prone than maybe the Federal Reserve themselves might believe?
I think there's two categories, Jonathan. There's the pre-existing underlying economics, and then there's the Trump tariffs and other effects. On the pre-existing, the economy is inflation-prone because financial conditions are not tight. They're just slightly tight in residential real estate, and otherwise not. I think we're inflation-prone because, for all the talk about energy deregulation, we've seen how that's actually not a major determinant of inflation, right? Energy prices came down enormously in the last year of the Biden administration, and that wasn't enough to make up inflation. And we're inflation prone because the Fed hasn't lost huge amounts of credibility, but we're not down to target, and it is a few years later, and the memory of inflation is very strong. That's the fundamentals. Then on Trump, we've just talked about tariffs. Again, in theory, you could have a tariff that's just a price shift, like anything that's not Canadian and Mexican becomes relatively cheaper. But in practice, it's going to be experienced as inflation. And then people will want to catch up with prices and wages. But also, the anti-migration stuff, leave aside the human rights. The anti-migration stuff is partly recessionary, partly inflationary, because it creates shortages of labor in certain industries like home health care, residential construction, food harvesting that native workers, documented workers don't want to do. And then you've got potentially, and this is going to be a lag, this is a few months down the road, very large tax cuts. And even if as Annmarie rightly says, you get some revenue from the tariffs, it's nothing to compare to the size of the tax cuts. So if you're the Fed and you're not just supposed to be reacting data dependent, but you're actually supposed to be looking at the forecast, it's very hard for me to understand why they're not pivoting more.
Just quickly, your base case is the next move's a hike and not a cut?
My base case remains that by September they'll be hiking. They may make a further mistake and cut once more. I hope not. But my base case is by September they'll hike.
It's quite a call, but you've been making it for quite a while. I appreciate it, Adam. Thank you, sir.
Thank you.
I imagine it's not the call you wanted to make either. Adam Posen there of the Peterson Institute. Coming up next on the programme, we'll catch up with the former acting FAA administrator, Billy Nolan, as investigators look for the clues in the fatal crash at Reagan National Airport. Live from New York City with equity futures positive by 0.5% on the S&P 500. This is Bloomberg Surveillance. Equity futures right now positive by 0.5%. We're up on the Nasdaq 100 by 0.8. Tons of tech earnings through the week so far. Meta was decent. The outlook for Tesla, the storytelling, powerful. Microsoft pretty mixed. As for Apple, the bar's pretty low for Apple right now. The numbers weren't great. They weren't great at all. And to be honest, neither was the outlook, but it was sufficient enough to cheer up Apple investors with that stock positive. in the pre-market and giving the Nasdaq a lift as well. In the bond market, 2-year, 10-year, 30-year yield shaping up as follows. Your 2-year 420.54, just about unchanged. In and around 450 all week on a 10-year. Absent that big move lower in yields on Monday, yields were back to about 452.66 right now. And I just want to finish on foreign exchange. Two currency pairs to watch going into the weekend. There's nothing else. Dollar MEX, dollar CAD. Dollar MEX yesterday had a 1 percentage point move with the threat of tariffs driving foreign exchange. Under surveillance this morning, President Trump expected to announce 25% tariffs on Canada and Mexico tomorrow, citing fentanyl and trade deficits as reasons for his decision. Trump indicating he will move forward with 10% tariffs on China without specifying the timeline.
So I think what's interesting is that Kevin Hassett said, and one of his economic advisors said on Fox Business, he's very serious about fentanyl. And Trump is using these economic levers, like we saw him use in Colombia, to try to get what he wants on other issues that he would deem national security. The issue with this, and I said this earlier with Adam Posen, I would be more shocked if we didn't get them tomorrow, based off the conversations I'm having. I did hear that the president did have a meeting, or at least there was a tariff meeting yesterday. He told the press they were even considering maybe going after oil. We don't know the scope yet. So depending on the scope of what we get tomorrow, we can have a very different reaction, whether it's foreign exchange, in bonds, in the oil market come Monday morning.
This is a very different approach. It's a new approach compared to what we saw from the first term of President Donald Trump. And you pointed in the right direction, I think. With China, it was about reciprocity, that we were open for trade, we were open for business, China was not. If you want us to remain open, you need to open up as well. I understood that quite well. Things have changed now. The objectives are about the southern border, immigration and fentanyl. For that reason, just to bring up Neil Dutta of Renmac again, he thinks there are some clear and obvious off-ramps here. Just provide a commitment to do something about it. On the southern border, on the northern border. I've got no idea what that commitment looks like, but would that be sufficient to keep tariffs at bay?
Potentially, or maybe keep some of the worst tariffs at bay, say tariffs on Canadian crude that we know that the U.S. desperately needs and Canada desperately wants to export to the United States. Trump also signed a memorandum to look into all these trading partners by April 1st. So maybe what he comes out and does is says, this is what I've drafted. Would you like to have a conversation before April 1st? I'll give you 60 days. If not, then these are going to come into force.
That's the big one to watch going into the weekend. Equity futures right now doing okay. They're up by 0.5%. Part of that is because of the earnings we've had. Apple delivering a mixed earnings report. The revenue from China plunging 11%. iPhone sales dropping more than expected. The company reassuring investors with a positive revenue forecast for the current quarter. The stock is up by 3.5%. I think that tells you more about expectations than the numbers themselves.
True, because they are really going to have a challenge when it comes to China. China's is building up these national champions that are cheaper and that have access to the AI services that Apple right now cannot use when it comes to China. Revenue from China fell 11% to $8.5 billion, but it still wasn't enough for the stock to go lower. But what does this mean for down the line? They are dealing with a tremendous amount of problems in China. And at the same time, what happens if the walls do go up? Does Tim Cook get a carve out?
And the stock is trading still at a lofty forward multiple. We'll catch up with Pierre Ferro of New Street in about 10 minutes' time. Look out for that conversation. Wanted to turn to this story. US officials probing whether deepseek brought Nvidia chips through firms in Singapore. Sources telling Bloomberg the White House and FBI are trying to determine whether the Chinese AI startup used intermediaries to circumvent US restrictions on sales of chips to China.
So basically finding a middleman that uses these chips and being able to then get them from some middleman, some sort of part of the supply chain that isn't blocked by these U.S. export controls, and then use them. There's going to be a ton of questions about this. And I think it's really going to embolden some of the hawks President Trump has surrounded himself with. Think of Senator Marco Rubio, who's now the Secretary of State,
sure,
and also now his new national security advisor, Mike Waltz, who have been very hawkish when it comes to China.
We're closing out the week with a very different story around deepseek. It started Monday, and all this speculation about whether it was done for $5 million, whether it was export compliant. We're closing up things for the week on Friday with a real question about just how export compliant that effort actually was.
So then you have to think about how efficient actually is it. Everyone was so excited and also a little bit nervous. Look what China's able to do without the amazing chips and without all this money. Well, actually, they probably got a ton of money from the CCP, and there's potential that they're actually usurping U.S. export controls and getting the advanced chips.
That's the latest on that effort. Let's turn to the top story across this nation. The National Transportation Safety Board leading the investigation of the deadly air collision at Reagan National Airport. The agency confirming it has recovered data recorders from the scene. Leading our coverage this morning, Bloomberg's Tyler Kendall. Tyler, what's the latest?
Well, John, crews worked overnight on the search and recovery mission. As we've been reporting, there are no expected survivors. We know that 64 people were on that commercial American Airlines flight. An additional 3 U.S. service members were on that U.S. Army Black Hawk helicopter when they collided. Now, the chief of D.C. Fire says that divers have reached all accessible locations. What that means is that we are expecting the search mission to enter into phase 2 today, where divers will start to bring out parts of the plane from the Potomac River in a bid to try to recover additional bodies. Now, big questions are still remaining. I was at the NTSB briefing yesterday where officials told us reporters that we can expect their preliminary findings and a report within the next 30 days, although information can start to come out ahead of that. As you mentioned, the NTSB confirming to Bloomberg News that they have recovered 2 of the data recorders from the commercial flight. That is going to be absolutely critical in their ongoing investigation because, John, this morning there are still big questions here at DCA, particularly after Transportation Secretary Sean Duffy said this tragedy could have been prevented.
Tyler, thank you. We'll catch up with you in the next hour. Stay close. Bloomberg's Tyler Kendall there, and the latest in Washington, D.C. Let's extend this conversation now with Billy Nolan, the former acting FAA administrator. Billy, welcome to the programme, sir. Under difficult circumstances, this is something we'd feared for quite a while after a number of very close calls in this country over the past few years. I wanted to share with you the latest reporting coming from the New York Times and elsewhere, and then get your thoughts on it, if I may. Okay. They're reporting that at the air traffic control tower, staffing was, quote, not normal. They went on to say that the internal FAA report, which was reviewed by the New York Times, said the controller who was handling helicopters in the airport's vicinity on Wednesday night was also instructing planes that were landing and departing from its runways, jobs typically assigned to 2 different controllers. Billy, when you hear stuff like that, how unusual is it to hear stuff like that?
It's probably not as unusual as you would think, and certainly maybe as the audience imagine. What I would say is this, that the FAA has worked hard to hit their staffing targets over the last couple of years. It goes without saying that Congress has allocated more funds to the FAA to increase the number of air traffic controllers. And I think if you talk to the airlines, they would tell you they would like to see more controllers to manage in the day. But let's just go back and think about this just a bit. So a night and a half ago, you've got clear weather, you've got night VFR or visual flight rules, right? So that which gives you the ability for both the controllers and pilots to be able to do some self-separation, if you will. So recall that, the American Airlines, the American Eagle flight was given clearance to land, and they're approximately about 350 feet on short final. The Black Hawk pilots were asked if they had the preceding traffic in sight. They announced that they had. So this will be a critical part of the investigation to determine what happened in terms of what the Black Hawk pilots saw. Indeed, did they misidentify? I don't want to speculate about that. That's really what the investigation is designed to do.
Billy, though, with your experience, how unusual is it for these 2 jobs, typically assigned to 2 controllers, being done by 1 individual?
It depends on the time of day. You think of operations. So we're talking, this accident happened at 8:47 on that night. So you look to see what that staffing model. But I think it is, it's an appropriate question to ask is, if normally if the component is to have 2 controllers in the tower, why weren't there 2 there? And so that will be a part of the investigation itself.
If they were able to hit their staffing protocols, how long does it take, though? Because I believe they hit them in September of last year, not that long ago. Yeah. So potentially they get to the number of individuals they want to hire, though, as these controllers. How long does it take to actually train these individuals?
It's a great point. Washington Reagan is one of our busiest airports along JFK and others across the country. So these are at that sort of what you consider at the top of the food chain, right? So on average, it takes somewhere between 2 to 3 years before a controller is fully certified once they come out of the academy in Oklahoma City. The FAA continues to explore ways of, how do you accelerate that training? How do, turn into universities, turn into our nation's military? So I think as we think to the future in terms of ensuring around the staffing model, remember it is Congress that appropriates and give the FAA the funds that it needs to operate. So this is something that's been talked about over the years and is certainly one of the valid concerns to go back and take another look at.
Billy, we've all heard some of the audio from the air traffic control tower that night. I understand you've heard the same thing. I'd be interested in your opinion on what you heard. Do you think that was just sort of standard protocol, or was there something ambiguous about the communication coming from the tower?
No, not in my estimation. So, I've been a pilot for 44 years. I have flown as an international captain when I retired from American Airlines. So I've been in and out of DC and just, hundreds of other airports around the country and around the world. It is typical in the case where you have visual flight rules, where once the American Eagle flight, call the runway in sight, that crew is given a clearance to land to that runway, in this case, runway 33. Again, it was asked of the Black Hawk crew whether they saw that traffic in sight. They answered in the affirmative. And so, the typical clearance is to maintain visual separation with the traffic. And then basically they should be proceeding on their course. So again, we don't expect accidents to ever happen, right? And the FAA has worked hard and the industry has worked hard on eliminating those calls. So again, this will be one of those critical pieces of the investigation to determine, if there was a disconnect, what was it, and how do you go about rectifying that and making sure it doesn't happen in the future?
Billy, as you know, there are 3 teams involved here: the flight crew of the American Airlines plane, the military crew of the Black Hawk helicopter, and then the staff in the air traffic control tower. Billy, as you also know, prominent individuals, including the president, have put quite a big spotlight on the staffing of the air traffic control tower. Now, we've documented this for years, the shortage of air traffic control. You're well aware of those difficulties. The president has suggested that it could be down to diversity, equity and inclusion practices that have led maybe to not just staffing shortages, but perhaps not having the right people in the job. Billy, you've worked the job. You know these people, these teams. Is there any evidence that that's taking place?
What I would say over the arc of my career, again, which spanned 44 years from a military pilot, a long time, almost 3 decades in the commercial aviation business, I have not run into any controller who wasn't qualified. Now, are errors made from time to time? Absolutely. That's the nature of humans, right? That occasionally unintended errors take place. And we know aviation can be terribly unforgiving of a critical mistake at a critical moment, as happened on this night. So it's right for us to go look into that, to dig, sort of to peel it apart and say, okay, we've worked hard. Now, let's remember that it's been almost we're 2 weeks away from the 16th year anniversary where the U.S. has not had a fatal commercial passenger accident. That record comes about as a result of these 3 parties, as you described, working together. The pilots, in this case, our nation's military, air traffic control, the FAA, all of us working to ensure that our airspace is as safe as it can be. And where we find errors and where we find trends, we've worked very, very hard to eliminate that. I can tell you I have it on good authority from colleagues still at the FAA. The FAA has done runway safety action teams, in meetings with towers around the country. They've started to implement more innovation in terms of reducing the number of conflicts that we see, some of these close calls that we've seen on the ground. This is the time, I believe, and I look, we, the industry, look forward. Our airspace is expanding, new entrants, eVTOLs, drones, all of these, which will be imminently safer. So if we want our airspace to keep pace with the level of innovation taking place and the number of entrants coming into our nation's airspace, we need to ensure that the FAA has the resources, has the people, and has, the financial help that they need from Congress to keep us as second to none across the world.
Billy, appreciate your time, and hopefully we can catch up again soon, sir. Thank you very much. Billy Nolan there, the former acting FAA administrator. One of Donald Trump's many powers is breaking with standard protocol and saying things that a lot of people are thinking. It's why he can connect with the general public in ways that other politicians really cannot. But when you say these things as president, it can compromise those around you. And I think this compromises the investigation, and I think a lot of people felt that way yesterday afternoon.
And there's a ton of criticism about him going up to the podium and saying that this was the fault of DEI and just basically saying, I have my own opinions. Well, an opinion is fine if you're a regular U.S. citizen. It carries a little bit more weight when you're president of the United States. One piece of news we did get, though, yesterday is that Trump actually named a new acting director of the FAA, Billy's old job. Because remember, when this happened, we didn't even have an FAA administrator at that time.
An investigation needs to take place, and we're in the process of doing that right now. When we get reports and headlines from it, we'll bring them to you. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Intel shares are rising 1.4% in the pre-market after the chip maker reported better than expected fourth quarter revenue. But executives said the increased sales were partly due to customers in Asia ordering ahead of potential U.S. tariffs. As for who will lead Intel, the company gave no update on the search for a permanent CEO. It's another story out. Walgreens shares are falling nearly 10% in the pre-market after suspending its dividend, which had been in place for nearly a century. It says the decision stems from a need to strengthen its balance sheet by reducing debt and improving free cash flow. The move is expected to save Walgreens about $650 million in fiscal 2025. And Sam Bankman-Fried's parents are trying to get President Donald Trump to pardon their son. Bloomberg has learned that Joseph Bankman and Barbara Fried have had meetings with lawyers and people in Trump's circle. The one-time crypto billionaire was sentenced to 25 years in prison for fraud. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, Apple's mixed results.
At some point, Apple Intelligence will drive services, but really what we still need to wait for is for Apple Intelligence to drive an iPhone upgrade cycle.
That upgrade super cycle remains elusive. That conversation up next, live from New York. You're watching Bloomberg TV. The threat of tariffs hanging over this market, but this market seems to be doing okay. Equity futures on the S&P positive by almost 0.5%. Lots of earnings to talk about. Let's talk about one of those companies now. Under surveillance this morning, Apple's mixed results.
At some point, Apple Intelligence will drive services, but really what we still need to wait for is for Apple Intelligence to drive an iPhone upgrade cycle. That's really the only way you drive sustainable growth for Apple. That will drive wearables growth, and eventually it'll drive services growth as well.
So here's the latest. Apple delivering a mixed earnings report. China revenue plunging 11%, but the company forecasting overall revenue to grow for the current quarter. Pierre Ferragut of New Street Research has a neutral rating on the stock with a 225 price target. And Pierre joins us now for more. Pierre, the stock is up by 3.5%. It's good to see you, buddy, as always. I just wonder if you're surprised the stock's actually positive after the results we saw yesterday afternoon.
Yeah, very, very surprised as well, John. The stock reacted negatively on the headline numbers because the quarter was weak. Within these weak numbers, you still have quite a strong momentum in iPads and for the MacBook. And the company guided low to mid-single-digit growth for the first quarter. And I think really the stock popped on that when management mentioned that on the call. And I think investors were actually very, very worried. Sentiment into the numbers was very bleak. Lots of downgrade into the numbers, and the market took that as a kind of like, oh, it's not as bad as we feared signal, and that's what really created the reaction of the stock. Reality is up to us. Things are playing out in line with what we were expecting. We're entering into a very weak cycle for the iPhone. Nothing dramatic. But what it means is really that as we were expecting Apple Intelligence, the introduction of AI features is not generating like a hardware cycle. We had expectations around that for the iPhone. We had expectations around that in the PC market. And what we've always said is AI is going to be a software-driven phenomenon at the edge. You'll see AI adoption moving with software upgrade and software adoption. And we don't expect, people to upgrade faster their device because of that. If you want like better iPhone sales, you need hardware innovation. You need the iPhone to look different to trigger, the need for upgrade amongst users.
Well, and one of their core markets, of course, doesn't have access to the AI service. I want to talk, Pierre, about China because Tim Cook really is all in on EM. But when he talked about the decline of what's going on in China, he blamed it on not having enough inventory. What is going on in China?
Yeah, it's very, to be completely honest, it was a bit difficult to really make strong sense out of Tim's comment last night. So first of all, he says like iPhone sales are doing very well where Apple Intelligence is available. And I don't know if you do your own, channel checks, but like all the feedback we get on Apple Intelligence from users, from consumers is very bleak and borderline negative. So it's very, very unlikely that we are in a world in which people upgrade their iPhone for Apple Intelligence. So it's shocking to hear the CEO really making explicit reference to that. And then on China inventories, we are all fighting about with like a point or 2 points of disappointment. So it's very small moving parts. And I can imagine, like people in charge of Apple sales in China reporting back to Tim issues they've had with inventories, which is business as usual. But there isn't any, to my knowledge, any specific situation in China that would justify, like a significant procurement or supply issue for the market.
What would drive an actual hardware upgrade for individuals? Because Apple seems to think AI, this Apple Intelligence, is what people are going to start flocking to the phones. But actually, at the end of the day, it's maybe just the true believers, but not everyone that needs a new iPhone is upgrading immediately just to get a hold of AI.
Exactly. That's the right question. That's the key question on the stock. You look at 15 years of history of the iPhone. The super cycles were the iPhone 6 Plus, like the new form factor with a larger screen, whereas the iPhone 10, the revolutionary form factor without a button, with a full screen, taking the whole real estate on the phone. To me, you have evidence of super cycles only with hardware innovation. So if Apple wants to generate that, they need to innovate on the hardware. That might be, the good surprise of the next product cycle, because we all know Apple is working on a super thin iPhone and like a premium iPhone, and that might be a more interesting thing to look at next fall.
Hey, Pierre, always appreciate your time, sir. It's good to see you. Pierre Ferro there of New Street Research. Neutral on the stock, 225 price target. We're trading at about 245, 246 in the pre-market. The stock is higher by 3.5%. Had a series of analysts over the last few months downgrade this name. This quote came from Oppenheimer. Lack of compelling Apple Intelligence and generative AI apps to accelerate near-term device replacement. That was ahead of the earnings. I think the earnings spoke to that theme.
Right. And Apple was hoping that everyone will be excited about Apple Intelligence, but it's just not driving that super cycle.
We're not upgrading just yet, that's for sure. Up next on the programme, the second hour of Bloomberg Surveillance. Just ahead, joining us, Mueller-Glissman of Goldman Sachs, Bruce Landsberg, the former NTSB Vice Chair, Nouri Arabini of Hudson Bay Capital, and Michael Zezas of Morgan Stanley from New York. This is Bloomberg.
We are now in a fifth year of inflation running well above the Fed's target.
We've been in an economy that's been nominally growing at more than 5% per year.
Anecdotally, you can come up with a lot of talk about labor market softening, but at the aggregate level, it really isn't.
You look at what the U.S. economy has done over the period of time that we've apparently been in extremely restrictive territory, and clearly we weren't that restrictive.
This economy is more resilient to interest rates than it was in prior cycles.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
The mood in this market at the end of the trading week is so much better than it was At the start of the trading week, equity futures right now positive by 0.5% on the S&P 500. On the Nasdaq 100, elevated by 0.8. Apple earnings weren't great. The outlook was okay. It was enough to drive that stock higher in the pre-market. Going into the weekend, though, it's the threat of tariffs hanging over this market.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. The people that have poured into our country, the drugs, fentanyl, and everything else, the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
So what happens next? I've got absolutely no idea. This is the indication coming from the Wall Street Journal. They report the following, that Trump's advisors are considering several off-ramps. And a lot of people in this market believe there are several, including commitments to doing something about fentanyl and immigration.
Well, this is the question. What is going to be the scope of this announcement? I would be more shocked if we don't get any announcement on tariffs come tomorrow. I think the president has made it pretty clear now, especially in the clip we just saw from him yesterday saying, I will be doing something February 1st. That's Saturday. That's tomorrow when it comes to Mexico and Canada. And a lot of this is being driven by the action he wants to see on fentanyl and because of immigration. But the scope of it is really important. He signed a memorandum in that executive order that he wanted this process to take place to review trade practices by April 1st. So maybe he comes out with tariffs and says, but you have 60 days maybe for negotiation. Or maybe he comes out with specific sectors that there won't be as much of an impact on U.S. goods. We don't know the scope, and that's the problem.
One sector, energy. Let's talk about energy. Yes, there is a trade deficit. No, there isn't one if you exclude energy. But that energy is energy America actually needs. Now, some people watching who might not be familiar with any of this would say, well, we've got loads of energy here in America. But some refiners in this country are set up to process a very specific type of crude that comes from Canada.
Right. It's this heavy crude, and that you need it when it comes from Canada. There are some places in the United States, these landlocked states in the Midwest, that only import from Canada. So if it becomes so much more expensive for them, you are going to see a massive market hit on energy. There's also a secondary factor to this. This administration, especially Secretary Rubio, who has just put out an opinion piece yesterday talking about Latin America and this push they want to make to countries in their own neighborhood in the Western Hemisphere. Well, where does all those refined products that the U.S. brings in from this heavy crude from Canada, then refines it, say, to diesel or gasoline go? Well, it goes to LATAM. Well, if you're not bringing enough heavy crude to then make those products to ship them out to the Western Hemisphere, who fills that gap? China. There's so many different spheres that come into play when it comes to potentially just this one sector, energy.
There's nothing obvious about this. I want to turn to foreign exchange as well, because the bigger moves you saw yesterday were through FX. So dollar MEX broke out by about 1 full percentage point. You can just see things are stable. We're doing okay going into the weekend. I'm not sure how serious people are taking this threat. Dollar MEX at the moment, 20.7, negative by about 0.1%. I think there's a reason for that. Maybe there's three. I think a lot of people all say the same thing about all this, that ultimately for the Federal Reserve, they look at a situation where the economy is decent, we can wait, they don't have to hike interest rates straight away. I think for broader equity investors at the moment, what I hear all the time is that the tariff approach from the president is transactional in nature and there's scope for negotiation. You put those two things together, and at the moment, they seem to be bullish on this equity market.
I think there's two different versions of tariffs in Trump 2.0 that maybe we didn't see in Trump 1.0. And Kellyanne Shaw, who I spoke to in D.C., who was in the room for the phase one negotiations with China and was a trade advisor under Trump 1.0, talked about this. There's Trump wanting to make sure there's realignment when it comes to what he would say free and fair trade. He wants to make sure that things are realigned, especially when it comes to places like China. Then there's tariffs to be used because of national security concerns. And that really is when it becomes more of a negotiation and a carrot and stick approach, like we saw with Colombia.
Equity futures right now doing okay. Looking through this, maybe we're positive by 0.5%. Coming up this hour, we'll catch up with Christian Mueller-Glissman of Goldman Sachs as markets await Trump tariffs. The former NTSB vice chair, Bruce Landsberg, on the tragic midair crash in Washington. And Nouri Rabini of NYU Stern and Hudson Bay Capital, and why he thinks deepseek is bullish for US equities. We begin this hour with stocks higher, boosted by Apple and Intel results. Now traders looking ahead to President Donald Trump's weekend tariff announcement. Mueller-Glissman of Goldman Sachs saying while markets broadly reflected a review of more US outperformance into the inauguration, lately there have been a growing number of exceptions to US exceptionalism. Christian joins us now for more. Christian, welcome to the programme. Bit tongue-tied after that. You help me. What are the exceptions to US exceptionalism?
Yeah, I think you've gone through these sentiment cycles where people essentially try to price the trade tariffs and the risks from it. And the problem is you just didn't see them come through. And I think there is this problem of buying the rumor, selling the news, not just working. Like people want to see those tariffs come through. And I think we've started to see some exceptions recently. The dollar is one where you have seen a significant setback. And I think generally European equities have done really well, much better than most people expected, considering there could be a target. I think in general, it just feels like the US exceptionalism was so well priced and people really used it, assets related to US exceptionalism, to diversify. But you didn't get any announcements, so you have a bit of a setback.
Christian, it was helpful towards the end of the year when the Federal Reserve was cutting and the economy still looked OK. The Federal Reserve stance has shifted somewhat. I wonder from your perspective whether you believe that policy uncertainty is constraining the dovish bias of the Federal Reserve.
It certainly feels like it. I think like the market is currently being held back. The kind of Fed is being held back by policy uncertainty. I think we all know that the baseline on macro is friendly and the data is continuing to come in friendly. But I think the policy uncertainty is very high and sentiment is very bullish. And this becomes a bit like a speed limit, what risky assets can do. And I think it obviously also becomes a speed limit for the Fed because they care about financial conditions. They care about the broader picture. So I think we're all just waiting for actual announcements and for policy uncertainty to peak.
But Christian, we'll be waiting for the entire 4 years because whether or not we get tariffs tomorrow, there's going to be tariffs levied at other countries, and this is going to be a tool that this administration wants to use for 4 years. How much could that just impact asset allocation and also the underlying economy?
Yeah, I think you can look at it from two perspectives. There's a market timing element where you can try to potentially avoid areas that might be targets of the tariffs. There could be opportunities to trade momentum into announcements, into official announcements that get rumored. And I think markets have tried to do that. But what we try to do a lot is just build portfolios that are somewhat robust, irrespective of tariff outcomes. And I think the dollar has played a key role in that. I think we've been very constructive on the dollar. We have this stronger for longer dollar view, and we just think like you have to be very careful to kind of be bearish the dollar until you do get more kind of actual announcements of US exceptionalism type policies.
If you're concerned about what's going on in the US, where else do you want to look?
Yeah, I think like what I find really interesting is Japan, where actually you could say that a stronger dollar is good for Japan just via the currency translation channel. And I think we've already seen that now for 2.5 years, where the weaker yen has boosted Japanese corporates, Japanese equities, but it was for bad reasons. It was because the BOJ actually decoupled, being dovish, while the rest of the world was actually shifting more hawkish. Whereas now you have the prospect of a weaker yen with the BOJ actually being hawkish. And that's a quite interesting setup where you're less worried about major hawkish policy surprises like major unwinds as you had in the summer of last year with regards to the yen. So suddenly you get like a clearer story of divergence, which is driven by the US. So Japan can be an interesting diversifier, but what we've certainly discussed with clients since the beginning of the year is also Europe. I think it's quite remarkable the amount of bearishness investors had coming into the year with regards to Europe. If you look at our conferences, we did like surveys from the audience, and you would say that Europe in most kind of conference locations was the least preferred equity region. So we're very focused on the upside tail with regards to Europe. We haven't gotten ourselves to be bullish Europe yet, but for example, looking at tail risk pricing in equities and FX and rates, all of that is incredibly cheap right now. So you can think about maybe hedging the right tail on Europe as well.
Christian, how much needs to go right, or how little needs to go right for that trade to pay off?
I mean, as of now, you see it. Europe has already done really well year to date, surprising a lot of people. And the earnings season so far is kind of like difficult to call. I think it has not been terrible. Certainly, you've seen some big results being a bit better than expected. I think the hurdle rate is low. Remember when you had the flash PMI announcement, which was actually a bit better than expected, it triggered quite a strong response.
Yep.
So I would say positioning and sentiment is quite bearish right now in Europe.
Christian, this is geographic diversification. Let's talk about cross-asset diversification as well. At 450, do bonds deliver? And at 450 on a 10-year Treasury yield, do you think bonds deliver you a ballast in the portfolio? Do they provide that?
You know what? The 300-year average of the US 10-year yield is actually 450. So you are more or less at the average in the last 300 years. If you take out the 70s, the 300-year average is 4.3. I don't think we're in a bad kind of place with regards to bond yields. We all know that we have a new factor here: fiscal deficits, debt to GDP, fiscal policy, bond supply. There is a term premium trend that is still upwards. But I think these repricings of term premium will be short. We've just been through one and we got the relief with the inflation data. There will be more. But I would say if you think about bonds in the portfolio, they become more valuable. There's a good yield. I always think about it about relative return, relative risk, correlation benefit, and return versus cash. On all of those dimensions, bonds look better. And I always say relative return looks better not because yields are higher, but risk premia are lower.
Got it.
Relative risk looks better because if you push bond yields up, equities will suffer probably more. So from that perspective, there's a lot of relative factors in the portfolio that make bonds more interesting. So we're very focused on balance.
Christian, from a correlation perspective, what does gold do for me right now? Given the slight drawdown that we saw on Monday as equities sold off, what's the relationship between broader risk appetite and gold at the moment?
It's very difficult because historically you could link gold to risk appetite nicely. There was the real yield channel, there was the dollar channel. But I think what we've seen in the last 2 years or so is that central bank demand has really taken over as a structural underlying force behind the scenes. And that remains very strong. So we like gold because of that. The incremental risk-off characteristics you still have, but they haven't even played out yet. There's a very good chance that something goes wrong in the global economy, either geopolitically or economically, and gold will probably be a really important buffer. But that's not even our view. Our baseline is friendly. So I think gold can play a really important role in the portfolio. I would say it can diversify geopolitical shocks possibly better than bonds, but it obviously competes with bonds paying you 4.5%. So I think there's a place for both in the portfolio, but I think gold has a few characteristics we like besides the bond market.
Record high this morning on gold, 2,800. Christian, thank you, sir. Appreciate your time. Christian Mueller-Glissman there of Goldman Sachs. With an update on stories elsewhere with your Bloomberg Brief, here's Yahara Hackes. Hey, Yahara.
Hi, John. President Donald Trump says he doesn't know exactly what caused the midair crash near Washington, D.C. on Wednesday evening, but he has opinions. At a White House news conference, the president said DEI programs may have played a role in the disaster. He also said there may have been a problem with the helicopter pilot. Meanwhile, sources say U.S. Defense Department employees accessed deepseek on their work computers for at least 2 days before the Pentagon blocked access. The sources say the employees connected their work computers to Chinese servers to access the startup's AI chatbot. They are still determining the extent to which employees use the system. And Chevron shares are up now in the pre-market after reporting fourth quarter earnings that fell short of Wall Street expectations. The miss was due to a slump in crude prices and weak margins in its refining business. Still, the company announced a 5% dividend increase. That's your Bloomberg Brief. John?
Yahara, thank you. China allegedly hacked into the Treasury. What are they doing in the Defense Department?
Just surfing on deepseek, asking them questions about things. It's kind of dangerous because if we do know that China has access, maybe like a back door into deepseek, potentially they're just spying on the DoD.
Slightly concerning. Equity futures on the S&P doing okay. No concern here, apparently. Positive by 0.5%. Up next, searching for answers.
We do not know what led to this crash, but we have some very strong opinions and ideas. We'll find out how this disaster occurred and we'll ensure that nothing like this ever happens again.
A conversation up next, live from New York City this morning. Good morning. Your equity market closing out the week, shaping up as follows, at least for this morning. So far this morning, positive by 0.5%. Bond yields higher by a single basis point. The 10-year 452.66. Under surveillance this morning in Washington, D.C., searching for answers.
We do not know what led to this crash, but we have some very strong opinions and ideas. We'll find out how this disaster occurred, and we'll ensure that nothing like this ever happens again. The FAA and the NTSB and the U.S. military will be carrying out a systematic and comprehensive investigation.
So here's the latest this morning. The National Transportation Safety Board leading the investigation into the midair crash between an American Airlines plane and a military helicopter near Washington, D.C. on Wednesday night. Bloomberg's Tyler Kendall joins us now from Reagan National for more. Tyler, good morning. What's the latest?
Well, John, the D.C. fire chief says that divers have reached all accessible parts of their search. That means that we are expecting the search mission to enter into phase 2, where divers will start to remove parts of the plane today from the Potomac River in a bid to recover additional bodies. As we've been reporting, all 67 passengers between the two aircraft are presumed dead. Now, big question still remaining this morning. I was at the NTSB briefing yesterday where they told us reporters that we can expect a preliminary finding report within the next 30 days, but new this morning, the NTSB confirming that they have recovered the data recorders from the commercial flight. That's going to be absolutely pivotal in their investigation as they try to piece together, for example, the altitude and the speed of the aircraft at the time of the collision. Because, John, there are still big questions about air congestion here at DCA. It has one of the busiest runways in the country, but also has a relatively small footprint, about 860 acres, considering the amount of traffic that comes through here. Transportation Secretary Sean Duffy said that it is too soon to say, but that they would look into potentially modifying the flight paths or even the number of flights out of here, which has long been a fight in Washington as U.S. officials try to reassure the American public that the skies are safe to fly.
Tyler, thank you for the latest down in the nation's capital. To extend the conversation, joining us now is the former NTSB Vice Chair, Bruce Landsberg. Bruce, welcome to the programme, sir. As Tyler indicated, there are multiple teams involved in all of this. I wonder if we could just begin briefly by starting the conversation talking about the approach that the NTSB takes to conducting an investigation after something like this tragically takes place.
Thank you, Jonathan, for being with you this morning. So the investigation follows a very clear path in terms of how things are done. We will have an investigator in charge. There will multiple teams, human factors, the aircraft themselves, the data recorders, and very importantly, our transportation disaster assistance team, which is working very closely with the families to help them get what they need. So the first thing is to gather the perishable evidence, which will be getting the pieces of the aircraft off the river bottom, and then they will be moved to most likely a nearby hangar, probably at Reagan National, and then they will begin the painstaking work of going through all of those parts and pieces to determine exactly the angle of contact and that sort of thing. The other thing that I think is critically important is we'll be looking very closely at the human factors aspect of this. And I want to preface my remarks by saying everything here is preliminary and subject to change. But the key areas are going to be the staffing in the control tower, because what we understand at this point is that the helicopter route position and the local control position were combined with one person handling both of that. They will be looking at the design of the helicopter route and its proximity to the final approach course to runway 33, the helicopter pilot's compliance with flying that route both laterally and vertically, and then our safety reporting systems. We've heard that there have been some previous close calls, and the question is, what was done about that? Have we figured out whether this was a good setup, and should that route have been moved to accommodate a greater amount of safety? I also want to talk a little bit about the operational aspects of all of this. The controller gave a warning of about 13 seconds to the helicopter crew, and the helicopter pilot reported aircraft in sight and then said, request visual separation. They're in visual flight conditions, so that's somewhat unusual. The other point that I want to make is that it's not as easy as people would think that, it's a clear night, because when you are in close proximity to the ground and other aircraft, you're going to have a lot of background clutter with all of the background lights. And there are a lot of aircraft that are coming into Reagan National at that point. So the pilot may have thought he was looking at a different aircraft than the one that was actually in close proximity. And
so,
then
Bruce,
the final
can I just
point,
jump in on that point, if you don't mind, and then you can complete that final point?
Certainly.
When you listened to the communication from that air traffic control tower, did you find that ambiguous then? Was that unusual?
Not from the tower. Again, this is very early in the process, but I did not hear the tower's communication as being ambiguous. Basically, they're calling traffic and saying, don't hit them. The pilot's response was a little unusual to my way of thinking, of saying request visual separation, because the controller is assuming that once the pilot identifies that he's seen the other aircraft, that he's going to maneuver appropriately, in this case, most likely to the left or to the east, to move away from the runway where the airliner was descending.
Well, this is where a lot of intrigue is, Bruce, about the altitude of the helicopter. I mean, this crash happened just under 400 feet. Is that outside the helicopter's altitude envelope?
I personally don't know that, but I suspect that the helicopter routes have a prescribed altitude, which is critical for them to adhere to. The other point, going back to the design of the helicopter route, is 100 feet or 200 feet is not a lot of separation. The other point to be taken into consideration is that airliners generate quite a bit of wake turbulence that's disturbing the air behind them like a boat. And having another aircraft directly below them is not a good safety measure. The last point that I'd like to make, which I think people might not understand, is the geometry and the limitations of the human eye. Because when you're on a collision course with two objects, be it an automobile or another aircraft, they do not appear to move. So it makes it much, much harder to pick that up, because we're designed to detect motion. If something's not moving, all it is doing is growing in size. And in a collision like this, it will grow very rapidly. That's called blossoming, just literally in the last few seconds. So there's a whole lot of things that NTSB will look at to determine exactly how this happened.
Bruce, we've got about 30 seconds left with you. For people not familiar with this airspace, could you just briefly share with us how unique this airspace is in Washington, D.C.?
Great question, Jonathan. This is probably the most secure airspace in the entire world. They were operating in what's known as the flight restricted zone around the Capitol, which was implemented after the terrorist attacks. And so air traffic control is monitoring it very closely. The Department of Defense is monitoring it. So this is extremely unusual. And as I say, I think this is going to give us a lot to think about in the days and months ahead.
Bruce, in the days and months ahead, when we learn more from investigators, we'd love to get your opinion on things as well. So thank you for sharing your views with us this morning. Thank you very much, sir. The former NTSB Vice Chair Bruce Landsberg there on the tragic mid-air collision in the last few days.
Given how significant this airspace is, then you have to wonder why then, with the New York Times reporting, was it not normal staffing procedures that night?
It's concerning, let's put it that way. Up next on the programme, we'll get the views on this market from Nouriel Rabini. That conversation just around the corner. Live from New York City, with equity futures positive by close to 0.5% on the S&P. On the Nasdaq, a little bit higher off the back of some tech results. The Nasdaq 100 positive by 0.8%. With 2 hours until the opening bell, let's get to Manus Cranny with your morning movers. Good morning, Manus.
Jonathan, good morning. There are some things in the world that are sacrosanct. Dividend. The dividend of Walgreens has been around for 94 years. So not only did they reduce it by 50% last year, but it's gone, scrubbed. What does it do for the stock? Well, if you're retail, you're probably recalibrating, earning 25 cents a share last year. But this is about what do you do when you cancel the dividend or you reduce the dividend. TD Cowen say they're not out of the woods yet. This is about the retail pharmacy industry and their business, and what are you going to do to reshape it? So right now it's a suspension of the quarterly dividend, and that in theory will save them around $650 million. Apple, we were white-knuckling it into the numbers last night, and you weren't disappointed because China underwhelmed. iPhone sales underwhelmed. Why is the stock up 4%? Because Cook went on the conference call and he soothed the nerves. China's going to recalibrate. Dan Ives has a bullish note. There's a shock. The iPhone 16 upgrade cycle is better than where we were with the iPhone 15, but it's about services within Apple. If you don't believe that they've invented anything, and they haven't perhaps since they gave us the iPhone, it's about services, the App Store, Apple Music, revenue there at an all-time high. Still the dependence on iPhone is unprecedented. Stock bounces this morning. I'll leave you with a note on Chevron. Now, when they went into the fourth quarter, oil was down 11%. They missed on their numbers, $2.06, way under the estimates of $2.11. But this is a year ago, they were earning $3.45. There are promises. We're going to constrain the capital spending, and Kazakhstan, their new JV, is going to produce about 1 million barrels a day by the end of this year. But when it comes to promises, Mike Wirth promises $10 billion a day of free cash flow because he's paying out. He's paying out a dividend of $7.5 billion, and his free cash flow at the moment, this is how you keep the institutional shareholders on side. His cash flow at the moment is $4.4 billion. I am not PhD, but that is a gap.
Manus Cranny, thank you, sir. Mike Wirth, one of the best. We'll be catching up with him very soon on this programme. Looking forward to that conversation. As for Apple, finding out that this week, telling powerful stories on the earnings call is very valuable. We saw that from Tesla, seeing it again from Apple, despite numbers that really weren't that great.
They're saying that even though numbers were not that great, we're going to be fine in China. They continuously mentioned India, how this is this great spot in EM for them. And then third, which I thought was so interesting, they decided not to talk about anything bad. When asked about potentially the impact of tariffs on their bottom line, we're not going to speculate or talk about that just yet.
Stock is positive by 4%. Under surveillance this morning, US authorities investigating a deadly midair crash at Reagan National Airport. The NTSB saying it has recovered cockpit voice and flight data recorders. The New York Times reviewing an internal FAA report showing staffing at the air traffic control tower was, quote, not normal Wednesday night, with only one controller doing two jobs.
That is incredibly concerning, especially given the overcapacity people talk about when it comes to this airspace. It is not just commercial jets going in and out. You have a tremendous amount of military personnel using this airspace to either zip around VIPs around the city, the DMV, or also just for training services. So what the New York Times is saying, not normal for that time of day and volume of traffic, is concerning. We do know that the FAA has ramped up a tremendous amount of hiring last year. But how long is it going to take to get those hires to a place where they could be sitting in the traffic control and know what they're doing? That's months or years.
We just spoke to a former NTSB official, Bruce Landsberg. Bruce was fantastic, by the way, and he talked about the DC flight restricted zone, one of the most scrutinised airspaces on the planet, which makes all of this even more concerning.
Right. If it's so scrutinized, why didn't you have enough staff on hand? The current NTSB head, though, spoke yesterday, and I think it's really important what she had to say in terms of everyone making just opinions or thoughts about what went wrong. We look at the human, the machine, and the environment. Basically, every single point of where this could potentially break down and why we had that fatal crash.
The investigation is ongoing. Any more headlines reporting, of course, we'll bring it to you. Elsewhere, Donald Trump barreling towards Saturday's tariff deadline, saying he vows to follow through on duties against Canada and Mexico. He's pledged 25% tariffs on about $900 billion worth of goods from both North American trade partners, Canada and Mexico.
Jonathan, I think you're right to say, is this market prepared? At the moment, besides maybe a little bit of it in the FX market, this market is not really taking this in kind, that this is coming down the pipe. I would be more shocked if he didn't do anything. The question going into tomorrow has to be, what's the scope? Because yesterday in the Oval Office, Trump just started flirting with this idea of, you know what, I'm thinking about it. We're going to decide whether or not we're going to have tariffs on crude. That would be a huge hit to some of these refiners in the Midwest. Then, of course, it's the retaliatory measures that we'd have to talk about next week. Then it could potentially be maybe just a grace period.
Yeah.
And then the real tariffs will come in 60 days on April 1st. We don't know, but something will happen tomorrow.
The consequences aren't obvious. It all depends on how it's going to be calibrated and how the market responds and how other people react. But ultimately, I think there is a consensus view in this market now that the president is transactional and there is scope for serious negotiation. And there are several off-ramps in the mix going into the weekend. Whether that turns out to be the right way of looking at things, that's the way of looking at things right now.
And also they have a good example when it comes to Colombia. Those tariffs and sanctions were drafted, but they were not signed. They were never levied at Colombia because Colombia then, in the end, bended to what Trump wanted to do. They bend their will. So potentially it's just an opening salvo. But what happens if Canada and Mexico decide not to play ball? Then those tariffs are coming down. Trump has to use them in some capacity if he also wants them to have weight for the remainder of his administration, or he just becomes a boy who cried wolf.
Then this market looks very different on Monday compared to how it looks right now. Some economic data at 8:30 Eastern Time, PCE and personal income and spending coming up. Bloomberg Economics expecting an increase in personal income thanks to strong wage growth and brisk hiring, and a spending increase driven by consumers snapping up durable goods ahead of, guess what? Potential tariffs, the front-loading of orders that we're all looking for.
So two things I'd like to say about this. One, remember when zero hedge, and I believe you also said this, Jonathan, potentially just this threat of tariff just means that it's a stimulus because everyone just keeps buying because they're so concerned with threat of tariffs. We did see this happen yesterday in the corporate space. Intel reported earnings, and they beat estimates. Part of that came from customers ordering ahead of possible U.S. tariffs, getting ahead of what potentially is going to be coming out of the Oval Office.
Check out that data at 8:30 Eastern Time. Let's turn back to the markets. Tech stocks leading gains this morning after a week of mixed earnings and news of China's deepseek AI breakthrough. Nouriel Roubini of NYU Stern and Hudson Bay Capital taking a bullish stance, posting on X earlier this week. In my modest opinion, the deepseek surprise is counterintuitively over time bullish for U.S. and global stocks, as it is another positive global aggregate supply shock that increases US and global potential growth and makes exponential AI even more exponential. Nouriel joins us now for more. Nouriel, always good to see you, buddy.
Great seeing you, John. Good morning.
Let's pick up on that theme. Why do you think this is good news? And do you believe it is the real deal? Export compliant only costs $5-6 million?
No, of course, in spite of the restrictions, probably got more GPU, Nvidia, and otherwise. They didn't use 5K, probably 100,000. R&D costs were much more, and so on and so on. Still, it's not a 20x improvement, maybe it's a 2 or 3x. But my point was that if this is true, even to a 2-3x extent, is one of the biggest total factor productivity increases in human history, literally, and should be increasing potential growth, not just in China. The reinforced learning can be used by everybody. It's open source, so everybody's going to use it. And it's going to increase also not only the productivity of those who are producers of AIs, but more importantly of the consumers of AIs. So if it's really true, and I think it's an iterative process, we all learn from each other, we all distill from each other within the US, between China and US and others, it increases the fact that AI is going to change the world for the better. There'll be a significant increase in potential growth in the United States and also globally. So over the medium term, this should be actually positive for US and global stock markets, not negatives. So the reaction, I think, initially on Monday was totally excessive. And the fact that now there's been some retracing over the week is people are digesting this news and saying this is not the shock that we thought it was.
Positive for stocks, positive for the economy, for economic growth. Do you think it's positive for society?
Well, there's been a huge debate about what are the risks of AI as opposed to the benefits of AI. I think in part is a political and philosophical question. We know misinformation, disinformation, risk of increased cyber warfare, eventually risk to humanity and so on. But I would say on net, AI, like any other technological innovation, is going to lead to an increase in both productivity growth, potential growth, and human welfare. We may be able to live until not 90, 100, 120, longevity, health, you name it. So it's a benefit to society overall. And there are side consequences and problems and risk, and we have to manage them. And I think that the regulation of AI is going to be very complicated. Probably like the internet, we're going to do it too little, too late, and then we're going to realize there are some mistakes.
If I clipped what you just said and used some AI and took out some words and replaced AI with globalization, weren't we saying the same thing a few decades ago?
Well, globalization that is being bashed right now by everybody, led to an increase in huge amounts of welfare for billions of people around the world, 2.5 billion Indians and others and so on, and even in advanced economies. So trade and globalization and technology are the same thing, is a ways of increasing productivity growth. There'll be a backlash, but I think that, and the backlash is going to come on AI, is that there'll be massive amounts of job displacement. Job augmentation will be initially, but then job substitution and replacement is going to be. And then there'll be UBI or other things to resolve it.
Will AI do to services what globalization did to manufacturing is a question I keep going back to. How many people are going to be satisfied with just UBI? I don't want to sit at home, do nothing and get paid by the government. We aspire as human beings to be better, to improve, to climb the social ladder. A lot of people
let's put it this way.
aspire to do
In
that.
a world of scarcity, of course, the dignity of life was to provide for yourself and for your family and go and look for water, food, shelter every day. In a world in which scarcity becomes less of a constraint, we have to produce less because the robots are going to do it and we can consume more. You're right that you guys saying what's the meaning of life in that situation. It's a philosophical question. And John Maynard Keynes in the 30s said, once we get this technology innovation, everybody's going to work only 10 hours rather than 60 hours, and we'll become poets, artists, creators, and whatever not. Maybe the nature of life is going to change. Maybe with AGI, we have to merge with the machine, because if we don't merge with the machine, they become hyper-intelligent and we become obsolete. And then there's going to be a new species. It's not going to be Homo sapiens, but Homo roboticus. But it's going to take decades. Those are important philosophical questions, but I would argue, provocatively, that 20 years from now, potential growth probably could be 8%, and unemployment rate could be 80%. We are going in that direction over time, and then we have to manage the consequences. And UBI, by the way, cannot be only national, because the winners and losers are not going to be only internal, but also across countries. Those who innovate get better off compared to those who don't innovate. Can we have a system of global governance that has cross-border UBI? I mean, those are big issues.
Global governance.
Well, a form of global governance, cooperation. We have
you
international.
Can't even, but if you use DeepSeek today, you can't even find out things about the Chinese Communist Party, things like Tiananmen Square.
Yeah,
How are we supposed to
absolutely.
have global governance with these kind of countries?
I think what's going to happen is that over time, given the geopolitical divisions between US and China, the world is going to be divided in two. There'll be a group of countries, US with its friends and allies, and others in the global south who prefer the economic, monetary, social, political, geopolitical system of the US and the West. Some in the global south are going to go with us, and there'll be others going to go with the model of China, both model economic, trading, state capitalism, geopolitical, security, BRI, technology, and whatever not. And there'll be a split world. But within the West, if there are, and those friends and allies, if there are winners and losers within countries or across countries, we'll have a system of transfers. I mean, we've been subsidizing the defense of our friends and allies from Asia to Europe for now 80 years, because it was in the global interest of the United States. So if we need to do global UBI across friends and allies and others part of our system, we're going to do it. But that's the world we're going. And China is doing the same thing. We have to subsidize our friends, and they'll do the same.
I'm petrified of the world you describe. I want nothing to do with it.
And Lisa's not here, and it's gone very existential.
Huh?
Lisa's not even here, and it's gone very existential, this conversation. When it comes to this idea of, all right, global regulation on AI, do you think Trump will use AI right now in the next 4 years as a bargaining chip as he tries to work on global realignment when it comes to trade?
He will. Actually, Biden, right before he left in early January, had this new AI diffusion rule that divides essentially the world in 3 groups of countries: Tier 1, Tier 2, Tier 3. If you are part of the global technological order of the United States and you accept all the rules and the security, you have access to unlimited amounts of advanced chips of Nvidia and others. You have access to all the AI models. You can have access to build in the data center, and you're part of our own technological sphere. And we set the rule of essentially who is in that type of Tier 1. We are deciding unilaterally. It's not a question about regulating AI, but who is our friend and ally. And even within NATO, there are only so far 18 countries that qualify for Tier 1. Not all NATO countries do. Of course, the countries in the Big Five I are part of it. Some of the other NATO members. Plenty of countries are not. Tier 2 is mostly the global south and everybody else.
Yeah.
And of course, China, our rivals, are Tier 3 and so on. So the US is going to set the rules of the global technological order. and it's going to do it totally unilaterally. And it's either you are with me, because I'm setting those technologies, and I'm the one who's advancing those technologies, and then you can use the chips, you can develop the application, you can do the data center with me, or otherwise you're in the doghouse.
I wanted to squeeze in one more question. The Europeans would be deeply upset. Europeans would be deeply upset with this conversation, I'm sure.
No, but they already accepted it. The same thing happened with data centers, right? They tried to find an alternative. They were not successful. And the hyperscalers are providing those data centers in Europe. And maybe they are technically in Europe, but they're controlled by AWS and Microsoft and you name it.
I'm against the clock.
That's already the world we're in.
I wanted to squeeze in a word on Stephen Moran, just quickly.
Yeah.
Worked alongside him at Hudson Bay Capital, who you represent this morning. Published a really interesting paper at the end of last year about activist treasury issuance, ATI. Yeah. Now, he's in power now. He's in the White House, working alongside Donald Trump as an economic advisor. Yeah. What's going to happen now? If you believe that Janet Yellen, the former Treasury Secretary, was issuing treasuries actively at the front end to have different objectives, how do we unwind that this time around? Do we even try?
Well, Scott Bessent, in his confirmation hearing, was asked about this. And he already said that effectively, given the impact on long-term interest rates, if you phase it out right away, it's going to be a shock to long bond yields are already going higher. In our paper, we estimated the shock could be, for the next 2 or 3 years, at least 50 basis points. So they know that. So they're going to have to wait and phase it out, one, gradually, and two, in their view, when bond yields are going lower, either going lower because maybe growth is slower or because inflation is lower. So they'll have to opportunistically, gradually phase it out over time. But it's not going to happen overnight. And they've already said so.
Nouriel, it's always good to see you, sir. Lots to think about. Scaring me about the future. Nouriel Roubini of NYU Stern and Hudson Bay Capital. I want absolutely nothing to do with that. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. The U.S. Army helicopter that collided with an American Airlines jet on Wednesday was manned by an experienced 3-person crew. A service official told reporters the instructor, pilot, and co-pilot had 1,000 and 500 flying hours, respectively. Investigators continue to probe the cause of the crash, which killed all 67 people aboard both aircrafts. Meanwhile, Secretary of State Marco Rubio is heading to Panama this weekend as part of his first trip abroad, where he'll emphasize President Trump's ambitions to retake the Panama Canal. Rubio is also expected to visit Guatemala, El Salvador, Costa Rica, and the Dominican Republic. In those places, he'll also discuss illegal immigration and deportations. And Paramount is reportedly in settlement talks with President Donald Trump. This after his lawsuit regarding a 60 Minutes interview with Kamala Harris that he alleges was deceptively edited. The New York Times is reporting that Paramount executives may opt to settle to boost the odds Trump allows its multi-billion dollar merger with Skydance to go through. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, barreling towards a tariff showdown.
I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. Those tariffs may or may not rise with time.
The View from Morgan Stanley. Up next, live from New York, you're watching Bloomberg TV. Live from New York City, equity futures positive by 0.5% on the S&P 500. Under surveillance going into the weekend, barreling towards a tariff showdown.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. The people that have poured into our country, the drugs, fentanyl, and everything else, the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
So here's the latest this morning. Will he or won't he? Global markets bracing for President Trump to unleash tariffs on Mexico and Canada tomorrow. The Wall Street Journal reporting advisors are considering several off-ramps to avoid the universal levies. Michael Zezas of Morgan Stanley writing, our economists see the tariff shock concluding in the second half of 26, but with delayed effects. They expect most of the inflationary impact from tariffs in 25. They expect a delayed hit to economic growth becoming clearer in the data flow in 26. Michael joins us now for more. So, Michael, if I was your client, I'd call you up. I'd say, will he or won't he? And is it bearish or bullish for Treasuries if he does? What are you saying back to them?
Yeah, well, so we have to take it seriously. And this is not something that's in the baseline of our expectations right now. So if we were to get these tariffs going on, some of the economic effects that we're talking about being delayed and sort of pushing growth down further in 2026 as opposed to now, we would have to bake those in. However, I think how these tariffs go on will be instructive in terms of whether or not we really want to change how we're thinking about growth and inflation and therefore market effects early this year. You talked about the potential for off-ramps. There are definitely different flavors of how this could go on. If it goes on but with a time-starting delay, or if it goes on with significant exceptions for a lot of products, that might not really change how our economists are thinking about things. If it goes on and we also see kind of a breakdown in negotiations, which is to say if Mexico and Canada are arguing that they've given as much as they could give, and therefore it seems like these tariffs are going to be sticky for several months, and that's the type of thing where we'll have to consider growth and inflation effects in the near term. And maybe our preference for equity and risk assets is going to have to change a little bit, more of a preference for less risky assets, government bonds.
Michael, objectives matter. If it's to clean up the southern border, do something about immigration and fentanyl, that's one thing. If it's to offset tax cuts, it's another. If there is significant scope for negotiation, can we take it seriously as a tool to offset tax cuts, given that it can change at any time?
Well, I think that part of it is meaningful because if you're an investor tracking potential fiscal impacts and how much the deficit could expand, tariff revenues can mitigate that impact. It's frankly one reason that we're not as concerned about deficit expansion pushing Treasury yields higher into 2026. But I think the more important effect here is what it means for growth and inflation in the near term. So more tariffs are going to create more of a kind of stagflationary effect in the near term. That's going to have to be expressed in a more challenging environment for risk assets. We're going to see a lot more volatility in foreign exchange in the near term. Right now, you're not actually seeing that in some of the currency pairs you'd expect, dollar CAD, dollar MEX. Our FX strategy team has been all over this, and there's been more volatility in these pairs around the election than there is right now. So that's something we have to pay attention to, and I think those are market effects people are going to have to watch for next week in particular.
It seems like the market is almost complacent, and Trump has been very clear. Something is coming tomorrow. How inflationary would it be if he went for what he's flirting with and putting a tariff on Canadian crude? Yeah, so I mean, there are near-term inflation effects when you are when you're implementing tariffs, as our economists have pointed out. The sort of more durable effect that's going to affect monetary policy is the demand degradation and the growth impacts that follow after that. So because of that, I think the real concern is that the Fed path potentially gets more dovish, and that's why you might expect to see government bond yields going lower into the end of the year, and you might have more of a preference for that. There will be more growth effects that have to feed through into equity market valuations, making it a more challenging environment for equities and for corporate credit.
Hey, Michael, appreciate your view. Thanks, sir. We'll catch up in the studio soon. Michael Ziza there of Morgan Stanley. Coming up, Anastasia Amoroso of iCapital, Tom Narayan of RBC, Claudia Sam of New Century Advisors, and Robert Tipp of PGIM Fixed Income from New York City. The third hour of Bloomberg Surveillance up next.
It's not just the earnings calls of the Mag 7 this period that matter. It's the earnings calls of the other companies.
The expectation for 2025 and 2026 is that earnings growth rates are going to decelerate.
We're seeing a separation of the winners and losers. We're probably going to be choppy here for the next 3 to 6 months.
This is a good time to think about these other diversifying hedges.
I don't think what we saw on Monday with DeepSeek is that canary in the coal mine. I really don't think so.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
So the opening bell about 90 minutes away. Going into that, equity futures on the S&P nicely positive, up by 0.4% on the S&P 500. On the Nasdaq 100 up by 0.75%, supported by Apple in the pre-market, higher by 4%. The numbers out of China not great, down by double digits. The iPhone still not experiencing any real growth year over year. But the outlook apparently sufficient to lift this stock this morning.
Which also, you brought a great point up earlier. What does it mean about basically the base case? And also how Tim Cook was basically massaging a lot of these questions on the call. A lot of money coming in for services. But yeah, the outlook, not too bad. So everyone's excited. And just crazy where we are at the end of the week with tech to where we started on Monday.
Compare and contrast, and doing this with not great earnings. Very mixed results from the likes of Microsoft. A powerful outlook from the likes of Tesla. Meta were decent, we'll give them that, but Apple, not tremendous, that's for sure.
Not tremendous at all, but maybe that actually helped what happened on Monday. Maybe it brought the bar down lower, what people were expecting, because they thought this is going to be really bad for all the tech players. So in people's minds, it cleared that bar that people had lowered.
Those four companies making up about a fifth of the S&P 500. That's all behind us now. In front of us, on the horizon, tariff threats, 25% on Mexico and Canada. I'm not sure how seriously you take this deadline, because this deadline is self-imposed. It is tomorrow, and the President of the United States has got a decision to make.
It is self-imposed. I will say, if we don't get anything tomorrow, I'd be more shocked than if we did get something. I think the president has made very clear, especially yesterday, something is coming tomorrow when it comes to Canada and Mexico. Will it be as high as 25%? Not sure. Will it be a grace period, maybe to what he has written down and signed, which is that executive order, that memorandum looking into trade partners by April 1st? Is this the opening salvo? It's the scope we don't know, but something I think is coming tomorrow.
You don't see that fear, if there should be any, and that's a judgment call in this equity market right now. The S&P positive by 0.4%. Coming up this hour, we'll catch up with Anastasia Amoroso of iCapital as Apple and Intel earnings boost sentiment, Tom Narayan of RBC on the risk of a tit-for-tat auto tariff war, and Claudia Sam of New Century Advisors on the Fed's waiting game. We begin this hour with stocks higher, Apple and Intel earnings boosting tech sentiment to end the week. Anastasia Amoroso of iCapital saying, well, the markets are used to hiding out in Mag 7 when uncertainties rise. This week proved that the economy and earnings landscape is supportive enough now for the rest of the market to be a pillar of strength. Anastasia joins us now for more. Anastasia, good morning. Good to see you.
Good morning. Good to see you.
I went back to something you said back in December, end of last year. Re-examine your AI exposure. Think about concentration risk in semis. Dead on.
Right. I mean, it has been preaching, I guess, this week. And, you know, the reason I think I said that is because when you look at the total addressable market for artificial intelligence, semiconductors is a sliver of that, but it's certainly not the whole pie. And actually, most of the benefit of artificial intelligence really sits in that software sector. And it makes sense that for the last couple of years, we've focused on building up the AI infrastructure. And that's why we've seen this tremendous results for the likes of Nvidia. But it has been some time already. And so, you know, we really are shifting to the stage from where we've trained some of the initial models and we're shifting to the use cases. And so I'm not surprised that the market is starting to see that. And by the way, the other thing that people actually who focus on tech and who focus on energy and who focus on power producers, they're not surprised by the efficiency gains. This was coming. So in a way, some of the efficiencies that we saw with DeepSeek was in line with expectations. And so as an investor, you know, one of the calls that I had is you have to broaden out your AI exposure to AI software, to AI power and AI infrastructure, and I still stand behind that.
Was Monday then a buying opportunity for you in this entire space?
Yeah, absolutely. And I would say it was a gradual buying opportunity. You know, the easiest call to make was to say step in and buy some of the AI software names because they were clearly the beneficiary of cheaper training costs and just quicker training costs. And so the software bounced nicely. You know, then as the week progressed, I really wanted to hear from Meta. I wanted to hear from Microsoft and some of the other big tech names. What are they going to be doing with their AI CapEx? And the fact that those budget numbers did not budge at all, and in some cases got upgraded, that really reiterated the conviction. It was a lot of reassurance that we're still going to continue to spend the same amount, but maybe we're going to get more bang for our buck. So once that happened, I think that really created a buying opportunity in some semiconductors, AI semiconductors that are tied to data center networking, for example, to some of the custom ASICs. And then it also created a buying opportunity in power producers, because that's the other thing that has not budged is the analysts in the energy sector, utility sector, data centers, they did not revise down how much power we're actually going to need. So
do you think DeepSeek was just a massive head fake? Because also the premise was that it was built cheaper and more efficient, and now there's potentially questions being thrown at it as actually maybe they usurped U.S. export controls to get ahead of it. So the base case is still that actually we're going to need all of these materials to build out these large language models.
I think that's right. And that's what we heard from the big tech companies, that they're still going to be going after buying more GPUs and more servers and more advanced semiconductor chips. But I don't think it was a deep fake in a sense that, yes, you're able to do more with less. And that's where we are with the development of artificial intelligence. But there's a huge positive to that because it expands the entire addressable market for artificial intelligence. It makes, the inference product that much quicker. And it also means that we not only going to focus on digital assistants, we might focus on physical AI. And it's not just for hyperscalers that are going to invest in AI. Also, enterprises will join as well as sovereign. So I think what happened this week really expanded the addressable market for AI.
Can we just pick up on the energy story? You said you stand behind that, and we saw a big shake-up on Monday across the pipeline operators, the gas producers, saw it in nat gas itself. Some people are making the argument this week that this move we've seen out of China will cap valuations in that space now. It will be a valuation headwind for the rest of this year. Do you push back against that?
I do, because not much has actually been priced in. So first of all, when you look at the valuations of utilities, there's not much benefit that was priced in for artificial intelligence. Second, when you look at what was priced in, some of those efficiency gains that I mentioned, that you might be able to do compute with less power, that was already baked in. But nevertheless, a lot of the analysts were modeling power demand still going up because we're still going to need to build data centers, and we're still going to likely decarbonize a part of the economy and electrify the transportation fleet. So there are other drivers of power demand. But John, I always look at, what's the expectations versus what's in the model. And some of that benefit of AI, certainly after the pullback today, is not in the model.
There was one other thing you said at the end of last year, and that was that semis could get caught up in tariff actions from the incoming administration. There's a real chance we see that. We got a report of that earlier this week, and it weighed on Nvidia. Does that make it even less investable, that space?
Look, I do think semiconductors are investable because you can't do any of the artificial intelligence possibilities that we're talking about. So I think it is a long-term opportunity in GPUs and networking chips. But I do expect it to be a much more volatile ride in semiconductors due to export controls. Let's say we do have some sort of advanced export controls on some of the semiconductors. Over time, of course, those companies will find a workaround. Their models will get de-risked and they will be investable. But I think what it means for investors is don't expect the same easy ride in semiconductors as we had the last couple of years. If you do have policy-induced pullbacks, consider buying them. But I expect more volatility in the sector for sure.
Expanding upon just tariffs and export controls on semiconductors, Jonathan and I have been talking all morning about this potential threat of tariffs tomorrow.
Yeah.
How do you view all that, and why do you think the market is a little bit complacent at the moment about it?
The market is shockingly complacent about it. Well, not all parts of the market. I'll pick up on that in just a second. I think there is a decent chance that something still does get done and the 25% tariffs don't actually go into effect. And I think, the reason for that is because the U.S. economy stands to lose a lot less than the Mexican economy or the Canadian economy does if there was a 25% tariff imposition. So I assume those policymakers have a very strong incentive to get something done with the Trump administration. So that's the first thing. The second thing is, if I'm wrong about that and, you do have the tariff risk, I think you will have a market reaction. And I know you have a autos analyst joining later in the hour, which I think will be a great conversation because the auto sector really gets caught up in that, given how much the parts move back and forth across borders. So I will be looking for that impact. But I mentioned that not all parts of the market are ignoring that. And, the thing to put on your Bloomberg monitor this year is some of the policy baskets. And if I look at, for example, the onshoring beneficiaries, they've done well month to date. If I look at the high percentage of domestic sales companies in the U.S., they have done well week to date. So I think they're reacting positively to that. The last thing I'll say about tariffs is, maybe we managed to avoid the 25% on Canada and Mexico. But the Trump administration wants this as a pay-for. So I don't think we'll be able to skirt all tariffs all year.
This is the point that we were making a little bit earlier. If you believe this is a negotiation tactic, then it raises questions about how useful it would be as something to offset tax cuts. Because if you think this is actually going to be a tool to offset tax cuts, it's not something you can just sort of have a transactional approach with partners. It's got to be dead set. It's got to be an offset.
Yeah, you
It's got to
can't
be
lift them
predictable.
at some point. You need to leave them on, right, to
and
be a
here's
revenue raiser.
Quick stat for you. The tariffs that are in place today raise something like $70 billion for the United States. If you have a scaling of tariffs, let's say 10% universal tariff, 60% on China, which is not what's being currently proposed, but the impact would be $300 to $400 billion in revenues raised from tariffs. So that actually does start to move the needle on offsets.
Anastasia, good to see you, as always. Anastasia Amoroso there of iCapital. Equity futures right now positive by 0.4% with an update on stories elsewhere. With your Bloomberg brief, here's Yahara Hekes. Hey, Yahara.
Hi, John. We start with an update on the investigation into the Washington, D.C. plane crash. The New York Times is reporting that the control tower at Reagan National Airport was understaffed on the night of the collision that killed 67 people. The report says that one controller was doing the work of 2 employees at the time the crash occurred. Sticking to that story, U.S. and Russian figure skaters were among those on board the American Airlines jet involved in Wednesday night's crash. The skaters, their coaches, and families were returning from a training camp in Kansas. And switching gears here, President Donald Trump is considering withdrawing federal support for New York City's new congestion pricing toll. Reports say Trump and New York Governor Kathy Hochul spoke about the toll this week. On the campaign trail, Trump vowed to kill the charge for drivers entering Manhattan below 60th Street. The White House declined to comment. That's your Bloomberg brief. John?
Yahara, thank you. Latest update on that front. OK, things were quiet. They were quiet for week 1, for week 2. And then things have started to get busy.
Well, the man
in
that
New York City.
Yeah, the man that sits behind the Resolute desk is from Queens, and he views this as a regression tax. And I think a lot of people from Queens and some of the other bureaus would maybe agree with him.
There might be someone from Queens sitting around this table. Up next on the programme, the Morning Calls Plus, Tom Narayan of RBC on the risk of tariffs for the auto sector. That conversation up next, live from New York City this morning. Good morning. Equity futures look like this on the S&P, positive by 0.4%. The opening bell 1 hour and 15 minutes away. Let's get you some morning calls. First up, Evercore raising its price target on Apple to 260, saying emerging markets are offsetting headwinds out of China. Your second call from JP Morgan cutting its price target on Intel to 23, highlighting macro uncertainty and increasing competition. And finally, TD Cowen reiterating its buy rating on Walgreens, expecting its dividend suspension to free up cash flow. That stock is negative. It's down hard by more than 12%. Let's turn to autos. Manufacturers bucking up for Donald Trump's tariffs on Canada and Mexico expected to begin tomorrow. Tom Narayan of RBC writing, while OEMs in our coverage can shift some production to manage such an event, most suppliers do not have that ability. Mexico tariffs would be highly disruptive and inflationary to the US auto consumer. Tom joins us now for more. Tom, good morning. It's good to see you. What a sector you cover going into the weekend. What are you telling clients about what's about to happen?
Well, I know my Saturday is not going to be. I'm not going to be skiing on Saturday. I'm going to be busy with this. But actually, your last speaker, Anastasia, actually said it right. You know, like, I think there's a lot of investors who think that ultimately we may not get tariffs, right? We saw what happened the first go around. Ultimately, the administration it's not trying to collect revenues from tariffs. That's not the goal, right? The goal is a concession from Mexico. So, you know, it kind of reminds me of the UAW, right? Like that whole discussion. Ultimately, it wasn't as bad as feared. A deal was struck. So if this is really what's going on here, that the administration just wants to get a deal done like they did before, maybe they can be averted. But if they aren't and this is protracted, it would be hugely problematic. We saw what happened with GM when they reported results earlier this week. Great results. Stock was down 10%.
No one believed the outlook.
Well, because if tariffs really hurt them, right? So it's this weird, like, super negativity mixed with maybe it doesn't happen, so everything's great. It's this weird binary situation.
Is your base case that this is, especially for Canada and Mexico, a negotiating tool?
Yes.
And that's what you're telling clients? And if it's not, how do they prepare?
I don't know. It's difficult to prepare. Maybe You know, if you're worried, if there's like you risk adjust, if you're worried about a 10% chance of something horrible happening, maybe you stay out of the sector. I'm saying 10%.
But ideology-wise, Trump talks about this a lot. He wants manufacturing back in the United States. He hates how the auto sector right now is going. That parts are going between Canada, Mexico, the U.S. He thinks that it's terrible for Detroit. Do you think there's some concessions that could be made within the auto space to bring more of that manufacturing to the United States?
Yeah, and that's already kind of happening, right? The question is like, how long will that take? I mean, fine, OEMs can do that, right? GM can move production of its pickup trucks from Mexico to the U.S. But supply chain, I mean, the seating industry is totally in Mexico. You'll have to source seats from Europe, you know? That's expensive and inflationary. So I don't think the argument is that like maybe they shouldn't do anything.
I also think Trump doesn't want to give Europe a necessary win.
Exactly. Yeah. So I think it's more of a to your previous speaker's point, negotiating tactic. It's what we learned from the first Trump go around. If that is the goal, it is happening. You know, after the pandemic, automakers tried to localize as much as possible too. So it would appear this is more of a negotiating tactic as opposed to just forcing these companies to move production immediately.
Can we spend some time on exposure? Who's most exposed? Sure. Who's least exposed?
Yeah, I mean, there's a pecking order. I mean, GM is the one that comes up the most. It's like a third exposed from production point of view. Ford and Stellantis are not as exposed, but still very exposed. So the D3 is hit the most. And then on the supplier side, there are specific suppliers. I noted that those exposed to seating, other components, companies that in my coverage, Aptiv gets called out a lot. A number of seating companies, those exposed to those D3s, obviously, because the suppliers, they don't have like, if you're making seats, that's where you're making it. Whereas like if you're making pickup trucks, you're making them everywhere. You could just change production. So yeah, the suppliers could be hit harder from that context than the OEMs. But it's really which suppliers are most levered to those OEMs that are hit the
Where
most.
does Tesla fit in this conversation?
Yeah, so we heard what the CFO said this week on the earnings call, that the tariffs are happening. They will have a negative impact on our business, I think was the quote. I mean, it does explain why they decided not to do Giga Mexico, right? So to that extent, that could have been a smart decision there. It'll have an impact, no doubt about it. They still source components, from suppliers. And so, like, it'll have a negative impact. It'll be inflationary, but maybe not as negative as the D3.
What explains why so many people put so much weight on the words of Elon Musk and the outlook of Tesla, and then they do completely the opposite with Mary Barra and GM? GM put out a good outlook. No one believes it. Stock crashes. Say crashes, down 10%, something like that. Tesla come out with a really powerful story about the future, and the stock rallies. What's the difference between the two companies at the moment?
Well, one's a car company, and the other one's an AI company, right? I mean, that would be the argument, right? For my valuation, as you guys well know, like 10% of my valuation for Tesla is cars. For GM, it's pretty much all of it, right? So, tariffs, what impact will they have on Optimus or the robotaxi business, So I think that's really why.
But for Tesla, the bigger issue for tariffs is not Mexico or China. Canada, it's China, isn't it?
Yeah, that's true. But again, I mean, people who are buying Tesla stock are looking at the autonomy, the narrative, the story, that 5, 10 years, 20 years away type story. They're kind of ignoring the near term. I mean, look at the result this week. The gross profit margin missed, right? I don't think anybody cared, right? The stock actually reacted positively on the commentary.
Isn't that a problem, though? They still make cars.
Well, I mean, it was a problem, right? But I mean, I titled my Tesla report, "Moonshots Are Getting Real," because we heard we're going to get a robotaxi service in June this year. It's like these things that were, I used to come on, not here, but let's say other places, and get laughed at by talking about robotaxis.
I've seen that.
And and now, and thanks to you guys, and folks are taking this more seriously. Now we're seeing a real service that's going to be launched in June. People are taking these moonshots, so to speak, seriously now. So I think that's what's changed that.
I think there's a difficulty sometimes, and we've talked about this briefly. There's often a failure to understand, and I've heard this from many great investors over the years, a failure to understand why a stock goes up or down. And sometimes it doesn't go up or down for the reasons you'd like it to go up or down. If you focused on deliveries and sales at Tesla, over the last year or so and placed your bet accordingly, you probably haven't done very well. I think you've made the point that to value Tesla, you've got to focus on something else. Can we talk about that something else a little bit more? Because that seems to be what's driving that stock.
Yeah, I mean, it's FSD. I mean, we got some interesting announcements. We heard unsupervised FSD by June of this year for not only this robotaxi service, but private cars, just camera-based. I mean, look how much Waymo is spending right on their robotaxi, and look, this is just a camera-based system. That's huge. Also, FSD in Europe and China looking to get approval potentially this year. These are all real near-term things. You know, an auto multiple is like, what, 3-4 times EBITDA. An autonomy story is 1 times sales. I mean, it's like a 10 times, you know, impact on the valuation.
How is FSD working out, and how does it stack up versus what Waymo is doing? Who's ahead here?
I mean, it's difficult to compare. I mean, Waymo is a far more expensive product, right? There's LiDARs and radars and all kinds of systems. It's like, I think, multiple $100,000 for one vehicle. The FSD system is just the price of the car, and the software is already there, like $30,000 system. So it's a good system. Obviously, it's not going to have the same accuracy as Waymo, but it's the people are looking at the trajectory of the miles before intervention. The FSD innovation and improvement is happening like exponentially. Is it the same level of Waymo today? Probably not.
How far is that ahead of where U.S. regulation is?
Yeah, I mean, it depends on U.S., right? Because its approval has to be done really more localized. So it would appear, we don't know how, but they're doing a service in June in Austin. Perhaps they have regulatory approval. I'm not sure. I don't know how hard it'll be to get the approval in California. That might be more hard.
Right, but then your car is state specific. That makes no sense.
Well, the approval for the robotaxi service, yeah. But they have FSD approval nationwide, right? Yeah. But because the liability rests with us, the driver. Once the liability goes to the car company, then it's going to be a little more difficult to approve. And that's what you could have different states having different regulations.
Just quickly, what's the June goal? Again, what needs to happen by June?
A service with unsupervised FSD. That means no driver in June in Austin. Paid service.
What would happen in your view, in your opinion, on the stock if that's not achieved?
If it's not June, but it's July, I don't think it matters.
Just keep rolling this forward?
Well, if it's like not 20, if it's moved and the goalpost changed beyond 2025, that's probably a negative.
We'd have a different conversation, maybe.
Could
Tom,
be.
It's good to see you. Appreciate your time. Thank you. Tom Naran there of RBC on Tesla. That stock down by not even 0.1% in the pre-market. Up next on this programme, some economic data for you as we go into the weekend. Breaking PCE and personal income and spending data. We'll catch up with Claudia Sam of New Century Advisors and Robert Tibb of PGIM Fixed Income, both of which are here to react. In the equity market at the moment, with 1 hour and 5 minutes until the opening bell, equity futures positive by close to 0.5%, and in the bond market, pretty much unchanged. The 10-year 452 from New York. This is Bloomberg. $60 minutes away from the opening bell with equity futures right now on the S&P elevated up nicely by 0.5% on the S&P, close to 0.75% higher on the Nasdaq 100. In just a few moments, we'll get some economic data for you. PCE, personal income, personal spending. Mike McKee's going to break that down. The scores in the bond market shaping up as follows going into those releases. We look like this. Yields unchanged on a 10-year, 451.85 on twos, in and around 420 with that economic data. Here's Mike McKee. Good morning, Mike.
Good morning, John. Well, we're starting to get the numbers dribbling in here. Personal income's up 0.4 during the month, which is exactly as forecast, and spending is up 0.7, so significantly more than forecast and significantly up from the 0.4 that we saw in the month of November. These are December numbers. Now, remember, yesterday we got the quarterly GDP that showed strong consumer spending. This just backs that up in terms of December. The PCE price index is up 0.3 on the month over month, up 0.2 on the core. I still have to double check and see what we get here in terms of the in terms of the year over year, although Powell had told us it would be 2.8% for the core and 2.6% for the headline. We'll see if that indeed comes out that way. And it does. So you can trust the Fed chair. 2.6% PCE price index year over year, 2.8% for the core. The ECI comes in at 0.9 gain, which is as expected. Wages and salaries increased 0.9%, benefit costs increasing 0.8%. So still seeing Americans get ahead of inflation on the ECI basis, which is the Fed's favorite measure of compensation. So Fed got to keep an eye on that in terms of inflation, although it's about where we expected. It was up 0.8 last quarter.
Mike McKee, thank you, sir. It's a strong ECI, but as expected, as Mike indicated, employment cost index at 0.9%, so wages decent according to that. You put that together with personal spending, coming in at a punchy 0.7%. That's an upside surprise, so pretty powerful numbers on that front. We've seen that a few times in the last 24 hours or so. Just to check in on the bond market, yields are higher off the back of this by a basis point or two on a 10-year, back to about 4.53. At the front end of the curve, we dropped briefly below 4.20, back above it now at 4.21. In the equity market, with about 58 minutes until the opening bell, your S&P 500 looks like they're still positive by 0.5%. On the Nasdaq, up by 0.8%. Of course, the story this morning supporting stocks, not so much the economic data here, Annmarie. It's all about the earnings, with Apple up by 3 or 4% in the pre-market.
All about the earnings, even though it was a little bit of a mixed picture when they reported, they are pointing to a rosy future. So that's what's driving this market. Also, Jonathan, I would note, coming off of these economic data, those numbers, personal spending, last night, Bloomberg Economics was talking about the fact that they do envision U.S. consumers ending 2024 on a high note, especially since for big purchase items, maybe they'll get ahead of something we've been talking about all day, potential tariff threats down the pipe, and maybe we'll get those tomorrow.
This weekend, 25% potentially on Mexico and on Canada. Over the last week or so, we had this article published by Claudia Sam on Bloomberg Opinion. Even talking about tariffs can cause inflation. Claudia Sam of New Century Advisors joins us now for more. Claudia, welcome to the programme. As always, it's good to catch up with you. For people who didn't have the chance to read that article, can we just go through it together? What's the standout message from you to people in this country about tariffs and the uncertainty and the price we have to pay for that?
So with the tariffs, they don't have to happen for them to have effects. People, if they change their behavior, and it looks like, and we've seen in various polls and surveys, which I talk about in the article, people are taking the president very seriously on the tariffs, probably more seriously than markets are taking him. And also when they're asked, well, what do you do about this? If you think there's these 25, 30% tariffs coming down the pike, a very large fraction of households say, well, we'll get ahead of it. We'll do the spending before the prices go up. One of the problems with that is that if you have that demand, and there are some inklings in the data that we've gotten from December, whether it's some of the import data, the durable goods spending data that we're getting out today, there's some inkling that people put this to work. And the issue is, well, if you get that kind of surge in demand ahead of time, that can get you the price increases and the inflation, right, if you don't have the supply matchup. So just that anticipation and trying to get ahead of the tariffs can create some of those effects. And then they're costly, right? People are adjusting their behavior. And in the end, the tariffs might not actually happen.
Well,
right?
they might not actually happen. But Claudia, I wonder, is this a double-edged sword? Can it also just act as a natural stimulus then in the economy?
Right, but we're not... It's all how you look at what are you trying to accomplish here. The frame I was talking about in the article is can you get that extra kick to inflation, the surge in demand out of the anticipatory behavior. It also can give us a pattern. I think what can be really hard right now to read in the data is there's a discussion of is the economy reaccelerating? Are we, in this, and this type of behavior, which is very temporary, right? It's just trying to move spending around in time. It's not necessarily people saying, oh, I'm going to go out and buy 2 cars. It's just, I'm going to get my car bought ahead of time before these tariffs take effect. So a lot of it's a timing thing. It makes it probably harder to read the economy. It's not necessarily that it kickstarts a big acceleration in spending.
Claudia, as you know, there's so many different variables here. Whatever happens, how it's calibrated is important, how people respond is important, what happens with foreign exchange is important as well, whether you can substitute certain goods, whether you can't. One thing we could talk about is how inflation-prone this economy might be and whether corporations believe that consumers still have significant price tolerance for them to exploit. Claudia, do you think this economy at the moment is inflation-prone still?
We still have a really strong, resilient economy. I mean, just like we learned today with like the wage numbers still look good, the income still looks good, right? This isn't the cash flush economy early in the pandemic when we were putting out all the relief and they had the pent up demand that was coming online. Like we're not, that is absolutely not the environment we're in. So I don't think you can make that comparison in terms of how inflation prone we are. And yet we're not Europe. Right? Like the US is still, there's growing, there's income. So there is a cushion that I think, still would allow consumers to absorb some of those price increases. So it's not clear that we've gone back to where the consumer is in control and the businesses don't have pricing power. It's kind of unfortunate to be testing that thesis at this point, but that may be where we're at.
Claudia, what does this mean for the Fed?
They're going to be waiting a while. I mean, they get the benefit of, we do have this resilient economy. We do have consumers are spending. We have the income growth. Like their argument that they don't need to hurry looks like a really solid argument, at least right now, from what we know. So, and that's good because it's going to get very messy to read the inflation data. Like if some of this anticipatory spending is happening, we could get, and we'd already seen the good spending inflation kind of, ramp back up a little bit towards the end of last year. I mean, we could get signals that are very hard for the Fed to read, and it makes it hard for them to make the case, oh yes, we're going sustainably to 2%, we can keep cutting. So I think this just, I would expect the Fed to be in a holding pattern for some time. And they're telling us, that's kind of where they're at. And I think everything we have data-wise so far supports that.
Claudia, appreciate your time. Going into the weekend with that important deadline, self-imposed deadline on tariffs. Claudia Sam there of New Century Advisors. For those of you that missed that article from Claudia earlier on in the last week or so, even talking about tariffs can cause inflation, by Claudia Sam, available on Bloomberg.com and, of course, on a Bloomberg terminal. Mike McKee, our economics and policy correspondent, still with us. We had some economic data about 8 minutes ago. Mike, also looking for some comments as well from Governor Bowman. What do you see?
Yeah, the blackout has lifted for the Fed. Mickey Bowman is the first one out of the gate with some comments on the economy that suggests she wouldn't maybe oppose the idea of a rate increase. She says risks are still to the upside for inflation, and she doesn't think that current levels of Fed interest rates are putting meaningful restraint on the economy. She doesn't use the word rate increase, but she does suggest that they need to watch closely, and she's in no hurry to cut rates again. So that's the first one. We'll see. We get a whole bunch of them next week speaking on the economy. One thing we want to mention again is that incomes are rising faster than inflation. That's an important point for the Fed and would be a talking point politically if the election were still underway. That's the good news. 9/10 increase in wages and salaries for Americans in the ECI, and that's a quarterly number, and a 4/10 increase in wages and salaries in the PCE for the month of December.
Well, Mike, speaking of politics, even Mickey Bowman talking about this idea of maybe on the margin she's insinuating they might have to raise rates. Doesn't that put a target on her back with the White House?
That's a good question, especially since people have talked about her as possibly taking Michael Barr's place as the vice chair for supervision when Barr leaves that post on February 28th. But she's always been an inflation hawk, and so I guess she's being true to her own philosophy, and we'll take what comes.
She's not running. Mike, thank you, sir. Appreciate it. Michael McKee there. I think people think Governor Waller is running.
They do think Governor Waller's running. When I saw those headlines, I literally thought to myself, I guess her name is going to go a little bit lower on that short list for Michael Barr's position.
Robert Tipp of PGIM Fixed Income joins us around the table. Robert, it's good to see you.
Good to be here.
Just heard from Governor Bowman. You heard what Mike McKee had to say, that risks are skewed to the upside on inflation still. Adam Posen of the Peterson Institute came on a programme earlier on this morning, and he made the point, he's made this point repeatedly now, he thinks this Federal Reserve will be hiking in September. They may make the mistake of cutting between now and then, but he thinks by September they'll be hiking. Where do you stand on that?
Yeah, I mean, that's a very valid concern. I think that, this economy almost has a demand problem. When you take a look at the consumption numbers that we saw yesterday in GDP, you can make a story that there's an acceleration going on here. And this, rings back to the late 70s, where you'd had a huge upside inflation shock like we had with the pandemic, and then the central bank cut rates because of a weak economy. This time, they're not even cutting rates because of a weak economy. They're cutting rates to make sure they don't get a weak economy. And now we're coming into the tariffs. So I think it is a vulnerable spot. I think it's great the Fed has recognized that. Our base case is they do end up cutting, but I think it's very valid. I think paradigm shift has been the tough thing to get, and people like Bullard, or it could be Michelle Bowman in this case, highlighting that that's something to watch for.
Painful for many members of the general public because they reduced interest rates by 100 basis points and mortgage rates went up because the long end sold off and yields rose. Can you buy the long end here, given that you think it's a very valid concern that perhaps inflation picks up again?
Yeah, so the best case for the market is the technical backdrop. This is an environment where, some money's gone into bond funds, some money's gone into stock funds. Twice that has gone into money funds. So while demand deposits may be low, and that's hurting consumers at some ends, of this situation here, there's a big reticence on the part of market participants to let yields get above the cash rate. They're more concerned about locking in their yield for the long term than getting an extra 0.1 for a little bit higher Fed funds rate for a short period of time.
Why are they so concerned? Is it because of just all the policy uncertainty?
No, I think that it's really the need for income and the notion that we're investing for the long term, and what most investors experience, especially those that have money to invest at this point, is that every time you get a Fed rate hiking cycle and you get past the peak, that is your last chance to get into the market. And so, this Fed, even Michelle Bowman is, I think, hinting that the next move in all likelihood is a cut, but that she wants to be open-minded on that. I think the average investor is saying, hey, they are going lower. They see neutral as lower. If I can get 5%, or for higher risk appetite investors, 6, 7, I should lock that in now before I find the cash rate at 3 or 2.
You also think the Fed's next move, if it's not a pause, it'll be a cut. What will push them to that?
Yeah, I think we're going to need to see
labor market.
Yeah, no, well, that would be a bad situation, right? And they're very sensitive to wanting to get the soft landing. Right, I think that's something that fixed income investors have on their side, is that they want that. They don't want to lose that, and that's I think giving them this easing bias that if it goes south, they're going to do that. I think that it may take longer with the tariffs. I think they want to see the core inflation come down, and there are a lot of things working against that, and that's what's created what looked like would be a fairly quick rate cutting cycle going down into the 3s. When we think about the situation in Los Angeles, is that going to put short-term pressure on insurance, on all of these things that are sticky, that take a while to go through services inflation? So we've seen a lot of two-way data. I think they're going to want to get confidence on core inflation before they're cutting rates.
I was disappointed that didn't come up in the news conference earlier this week. The disaster hit parts of this country, the southeast, of course, which we've not forgotten, with the hurricanes at the end of this year, and then the wildfires in Los Angeles. Just want to bring you a quick update. Just getting a headline from Reuters that the Nvidia CEO, Jensen Huang, will meet with the President Donald Trump later today. Nvidia, of course, in focus for a whole bunch of reasons, including what happened Monday with DeepSeek. But later on in the week, we're having this conversation, I think on Wednesday. On Wednesday, the prospect of additional export controls on Nvidia chips.
Right. Additional export controls on Nvidia chips, especially those that are going to China, and maybe even caps on going to other countries around the world. I remember when Ed sat down with Jensen Huang and he said, we haven't met yet, but I'm really excited to, and I hope to. This is interesting because this is not a meeting, of course, at Mar-a-Lago before he was inaugurated. This is a White House meeting, and I wonder if this carries more weight about what's actually going on with export controls. And I'm sure someone in that meeting, whether it's the president or Mike Waltz, is going to ask about, do you think China was able to develop DeepSeek without access to your high-level chips?
I keep going back to that statement from Nvidia earlier on in the week when they said it was export compliant. We'll see what Jensen Huang's actually got to say about that. The stock, by the way, is down by about 1%. Robert, before you go, we've got a few more minutes with you. I wanted to fit in some time on corporate credit. So high-yield credit spreads are about 260 right now, which on a historical basis, as you know, is pretty damn tight. I just wondered from your perspective where we are, what your approach to credit at the moment looks like. We caught up with someone a little bit earlier, Sebastian Page at T. Rowe Price, who made the point that actually, from his perspective, he's been selling down just a bit of high yield, a bit of equity on valuations. Where do you stand on that?
Right. You know, I think that what investors have seen since the financial crisis, that every time spreads get this tight, something really bad happens. I think this is going to be the time that that doesn't really pan out. And we've seen it before, but not lately. You know, when you go back and you look at the spread levels that existed in 04 through 07, especially in European credit, they were much tighter. When you look back at the mid-90s, spreads were much tighter. And those were periods of time when the budget deficit was smaller. Right now, you have budget deficits pushing Treasury yields up against corporate credit, and corporate fundamentals look pretty good. So I think we're going to be in a narrow range-bound environment for credit. That's going to allow credit to outperform in general. Not to say that you don't need to be discerning among individual credits, but I think this is going to be tighter for longer than a lot of people think.
Robert, appreciate your time. As always, thank you, sir. Robert Tipp there of PGIM Fixed Income. Just getting confirmation of that meeting here at Bloomberg, Annmarie, that the Nvidia CEO, Jensen Huang, will meet with the sitting President Donald Trump later on today.
They're going to have a lot to discuss, not just about, of course, Stargate and Trump's idea of putting all this money in public-private sector when it comes to AI, but serious national security concerns when it comes to these export controls and when it comes to China. And that was on display at the start of this week with DeepSeek and everyone talking about that they were able to do this with those lower-level chips. And then we've had a report with our colleagues out of Washington saying actually national security concerns are that they're going through maybe a third-party country like Singapore and getting access to these highly advanced chips.
I'm hopeful we get a camera in that meeting and we get some comments later on this afternoon. For those of you who want to know where the equity market is, equity futures right now positive by 0.4%. The opening bell is about 43 minutes away. With an update on stories elsewhere this morning, with your Bloomberg brief, here's Yahara Hacker. Say, Yahara.
Hi, John. U.S. investigators have found the black box flight recorders from the American Airlines jet that collided midair with an Army helicopter in Washington. The NTSB is leading the investigation and expects to produce a preliminary report within 30 days. A final report could take up to 24 months. Meanwhile, Chinese startup DeepSeek is under investigation for allegedly using Nvidia chips that aren't allowed to be shipped to China. Sources say U.S. officials are looking at whether DeepSeek bought the advanced chips through firms in Singapore. We're now reporting that President Donald Trump and Nvidia CEO Jensen Huang are meeting today. And a senior U.S. Treasury official is reportedly leaving after clashing with allies of billionaire Elon Musk. The Washington Post is reporting David Liebrich, who served in non-political roles at Treasury for several decades, is expected to exit. The move coming after disputes with allies of Musk over access to sensitive payment systems. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Going into the weekend, there is only really one thing to watch. Will he or won't he slap 25% tariffs on Mexico and Canada? We'll have a brief conversation about that next and get you some individual stock movers into the opening bell. From New York, this is Bloomberg. .38 minutes away from the opening bell. Equity futures doing nicely, up 0.5 on the S&P. On the Nasdaq 100, up by around about 0.8, with some movers going into the opening bell. Here's Manus Cranny. Hey, Manus.
Jonathan, good morning. Yeah, Tim Cook did a good job last night. We'll come back to those in a moment. The headline on Walgreens is this: suspending the quarterly dividend. They've already slashed the dividend. Is this the real solution to your problems, or do you have to do something much more aggressive, root and branch in terms of the business? And that is the risk. You can suspend the quarterly dividend. You'll save about $650 million is the assessment out there in the market. But TD Cowen say this: you're still not out of the woods. You've got to turn around the retail pharmacy business. And to that extent, Is this a last roll of the dice, a desperate measure before something much more significant in terms of adjusting to the brutal reality for the retail investor? Apple, I mentioned Tim Cook there. I like what Dan Ives said this morning. We were white-knuckling it into these numbers last night, and they were pretty disappointing. China was awful. iPhone was terrible. But the soothsayer came on the call, really talking to you about the calibration of the supply chain in China. So I love what Wedbush, with one of the guys on this morning. Institutions have long been underweight this stock. Hedge funds are perennially short this stock. So it's about turning the story in China around. And the services business, to a certain extent, gives you a little bit of a drift up in this stock. The App Store, the Apple Music, all at a record high in terms of revenue, $26.3 billion. Are you long Apple? You're long Apple in your life. I'll leave you with a look at Chevron. Oil prices were down by 11% in the fourth quarter. Yes, you've got big risks over the next 24 hours on oil, and Goldman say you could make it back to $93. But what Mike Wirth has done here is he's promising you honey tomorrow. Kazakhstan will deliver 1 million barrels of oil by the end of the year. I will be restrained in my capital expenditure. So these are promises of a discounted cash flow of $10 billion by 2026. Right now, Jonathan, I would say to you, you've got a free cash flow of just over $4 billion, and you're paying out $7.5. That is what I call a gap.
Stock is a bit softer, negative by 1%. Manus, great work this morning. As always, as we count you down to the opening bell, some movers there, some single names in the pre-market to look out for the cash open in about 36 minutes' time. Here's a look ahead to the next 24 hours, the next 48 hours, and into next week as well. Tomorrow, President Trump's tariff deadline. Looking ahead to next week on Tuesday, JOLTS data and durable goods plus Alphabet earnings. On Wednesday, we'll hear from Disney. Thursday, we'll get another round of jobless claims and a Bank of England rate decision, plus Amazon results after the closing bell. And then already, is it really already? Payrolls Friday? Just around the corner. Payrolls not too far away.
January is over, or it's just beginning, because the Trump administration really is just beginning. And potentially this weekend, we are going to get a either huge tariff threat that he enacted on, or it's going to be the opening salvo for fresh negotiations with Canada and Mexico.
I think we've gauged where the bias is in this market at the moment. There is a strong bias, a strong view, a consensus, if you will, that there is scope for negotiation here, and this will ultimately be avoided. From the people that you speak to down in Washington, do they take a different view of things?
Well, I think they view it as two-front approach. One, a national security issue that could be used as a negotiation the way we saw in Colombia, but then also maybe blanket tariffs as revenue raisers, as a realignment of global trade that Donald Trump thinks has been unfair for years, if not decades, that he wants to fix in the next 4 years. So there's this two-track approach, and I guess you have to just decide, or he needs to decide which one he's going to be using, especially for this weekend.
The trading week is potentially a day longer, and it already feels like a month long. We're all waiting to see what happens over the weekend. On Monday, the full team will be together. Lisa will be back. Annmarie and me will be here. We'll be catching up with Laurie Calvasina of RBC, Ed Al-Husseini of Columbia Threadneedle, the former senior White House trade advisor to Trump, Kellyanne Shaw, and Katie Kaminsky of Alpha Simplex. You will have a wonderful weekend. Thanks for choosing Bloomberg TV. This was Bloomberg Surveillance.